That continues. US 10-year yield, 4.74%. We saw a 20 basis point drop in the yield at that tenor in yesterday's session as a result of, well, certainly post-Fed. And this is the Bloomberg Dollar Index. Worth pointing out that we are continuing to see dollar weakness this morning, down 0.3%. That also means a bit of strength in the pound. Does that leave the pound vulnerable with this Bank of England meeting looming large later today? Tom, what do you see on futures?
Futures then, you have the CAC 40 looking to close up above 7,000, potentially. You're looking at gains of 0.8%. We'll see if they get through that 7,000 level. FTSE 100 looking down 51 points. Over in Germany, upside of 0.7% being flagged by the futures.
Okay, so expecting some positivity at the start of the European trading day. Then futures certainly suggesting that we catch up with Wall Street with a bit of that exuberance that entered into markets at the end of yesterday's trading day. As I say, the Fed talking about moving cautiously, carefully from here, and people drawing conclusions that in some cases are dovish as a result of that. Mark, though, focused in the last hour on the weakness of the data and saying actually it was that side of things that was driving sentiment. Anyway, all of that added up to a lower yield story in the US, and we see some of that very clearly coming through. Sovereign bond yields spent the last hour moving down, buying of sovereign bonds. We're also buying stocks then, that's very clear from the start of trade today, so we are pretty risk on. The FTSE in London is up by 0.7%, 0.9 on the CAC 40, 0.8 over on the FTSE MIB, and we're kind of risk on FX as well. The dollar index continues to move lower. That's the Bloomberg Dollar Index down 0.3%. The euro and the pound both gaining as a result of that. A pretty mixed picture then coming through on commodities this morning. What do you see, Tom, on the sectors?
Every major sector in positive territory. Technology, as you suggested, as a result of those lower yields, but also the good earnings and the forecasts coming through from chipmaker AMD. Technology surging 1.3%. We've had higher iron ore and copper prices this morning. That is lifting basic resources. That sector currently getting 1.3%. And over on energy, because oil, Brent, CO1, that's the ticker. Brent and WTI both up this morning as well. So energy getting a lift, 0.9%. Those are the standout sectors as I see them. Every major index again, every major sector in the green. You're also looking at autos adding around 0.2%. But again, for me, it's technology, it's what's happening in basic resources and energy that really stand out in a positive mood for these markets. Across the benchmark, gains of 0.6%, Anna.
Yeah, what does it mean when you start to talk in tickers? Let's talk to Sam Unstead, who joins us from our Markets Today blog, who has plenty of tickers under review as a result of the Fed or the post-Fed market moves. Let's talk about the Fed then. We've dwelt on this a little last hour with some of our guests, talking about how they, given how far they've travelled at the Fed in terms of rate hikes, now being a little more careful with what they do from here. That seems to be one of the messages.
Yeah, and it's interesting. So it seems to have been taken in a quite a dovish way. But actually, as Mark kind of said earlier, it appears that a lot of the rally is really more being driven by the data. So we had that bad data yesterday. That appears to be at the moment good for stock markets. So although it's being taken relatively dovishly, it's hard to tell how much of it is the Fed moving everything and how much of it is the data. So that'll be something we'll have to, I suppose, dig into over the course of the...
Of course, that ties into what's happening in the bond markets. And it was pronounced yesterday, wasn't it? The 20 basis point move in the US benchmark, the 10-year yield. So the question then is that it? Is the bear market for bonds closed? Is the door closed on that? Are you going to see more flows into US Treasuries to take advantage of those higher yields?
Yeah, well as you say, Tom, it's big moves again, but that's becoming more and more common, or certainly much more common than when I started looking at what Treasury yields are doing. And I think at the moment it is very hard to tell whether the Fed is done, and it will become more and more a case of trying to decipher: is it the Fed, is it central banks that are moving Treasuries, or is it the data that's moving Treasuries? And in terms of is this the end for where Treasury yields have gone? Certainly, if you look at the chart, it doesn't indicate that. That still, yes, we've had a little bit of a dip, but that has happened previously, and so we'll just have have to see really over the course of the next month.
And we've still got plenty of data to come today, as Mark was pointing out to us. We're focusing in on that. And interesting, that volatility in bond markets. We had a great big take story at the beginning of the week about hedge funds and fast money and the way they are much more active in bond markets than previously. So that's something to look into. Let me ask you about earnings, and we've got plenty here in Europe to talk about, but technology as a theme globally seems to be gaining momentum with AMD and Qualcomm.
Yeah, I think you guys mentioned AMD. I think Qualcomm adds to that story. You know, again, very similar to Intel and also what we had from Samsung earlier in the week, an indication that the chip market is starting to turn and that a recovery is now seen. And of course, this also comes ahead of Apple earnings as well. And so I think that tech story will really start to get filled out. We had a lot of the big tech companies last week. Apple kind of rounds that out. And then we'll have a much clearer picture, really, of not just what's coming in for the final quarter of the year, but what's coming into 2024.
Yeah, we'll see if Apple builds on that positive picture and how much demand they're getting for that iPhone 15, and of course what the story is out of China as well. Sam Unstead, thank you very much indeed. Of course, from our Markets Today blog, you can get more from Sam, the rest of the brilliant team on the Bloomberg UK website, or by typing TLIV Go on the terminal. Coming up, the Bank of England is likely, as we've mentioned, to follow the Fed in holding rates later. The focus now turns to the forecast. We're going to discuss that next. This is Bloomberg.
What did you learn in the last 40 years about leadership in politics?
Well, I've learned a lot about leadership for a very long time, observing it in others, recognizing what is needed to get the job done. And I always define it in this way: know your why. You have to know why you're doing this, because you will be under attack, this for sure. Know your why, know what you're talking about, know how to get it done, think in a strategic way, and then that's all up here. And then also connect directly with people. If you can show them how important what you're advocating is and what you know you're talking about, so they trust your judgment, and you have a plan, you will have followers. You will be a leader.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
From New York City,
In London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside? This is Markets Today, 7 minutes into our European trading day, and European stocks are pointing higher are higher this morning, up by around 0.8% on the Stocks Europe 600. Let's check in with some of the individual movers this morning. Joe Easton from our equities team has an update for us. Joe.
Just 1 second, sorry.
1.1% at the moment. They did do another buyback, total buybacks in the half year, 6.5.
Oh, we seem to have a bit of an issue with Joe's microphone. We will try and rectify that. So stocks in Europe then, Tom, up by 0.8%. All sectors, I think, last time we checked in, were in positive territory. It's really that technology theme from Asia that seems to have captivated it on the earnings side, and then the Fed/weak data story as well.
Yeah, so on the earnings story, we're discussing with Sam around the optimism, around the forecast that came from the chip maker AMD. That led to some upside for technology stateside yesterday, and you also got a bit of lift in terms of the earnings that came through from Qualcomm. You pair that, of course, with the central bank story, lower yields, that move of 20 basis points lower on the benchmark, and you get a good lift for technology. It's one of the top gainers across your sectors, 1.6% being added. Top of the list, though, is real estate, adding almost 2%, but every major sector so far in the session. What are we, 8 minutes in positive territory?
OK, let's get back to Joe Easton. Now, he does, I promise, have an update on some of the movers. Joe.
Keenly anticipated earnings this morning and movers. So we've got Shell ticking higher by around 0.7% now, coming down from the 1% earlier. They are doing another buyback. It is $6.5 billion worth of buybacks in the half year, above the $5 billion that they had anticipated. Meanwhile, BT coming up by around 3%. Earnings as well. They've got a new CEO coming in, and they are cutting costs with some job cuts as well. That one getting a bit of a boost today. In the fashion space, it's a mixed picture. Zalando is lower, a bit of a profit warning based on online retail. This is the German version of ASOS, coming down now. Was down around 3% earlier, actually, now down only 0.3%. Hugo Boss, strong sales, bucking the trend in luxury, doing pretty well in women's wear now as well. Earlier today, we spoke to the CFO of Hugo Boss.
We have exceeded our top-line performance and our bottom-line performance. The good news is really it's a broad-based growth, so we are growing for both brands, Boss and Hugo. Women's wear is even growing faster than Boss menswear, and we are growing in all our different regions. So all the investments that we have done and that we are still doing for Hugo Boss are really paying off.
So that was the Hugo Boss CFO speaking to Bloomberg, but we are, of course, also looking at Novo Nordisk as those massive Wegovy sales in the obesity and also general diabetes drugs. That one ticking higher, 1% following those sales. A decliner in healthcare is Haleon, the maker of vitamins that was spun out of GlaxoSmithKline. Weak earnings from them today. There's worries about Glaxo also selling down their stake in that company. Sainsbury's, that one moving up. The CEO was saying earlier that they are managing to fight off competition from the likes of Aldi and Lidl, so their earnings doing pretty well. And Entain, now this is an interesting one, the gambling company saying that favourable sports results are weighing on their earnings, so punters making more money from their bets is hurting them, according to Entain. So that one ticking lower at the moment. Doesn't really count for me betting on Chelsea, but I'll take his word for that one. We'll flip over onto the final board. We've got Tenorus. This is the steel piping company. That one a big gainer, up around 8%. And Lufthansa as well, gaining a bit of altitude, that one after some solid earnings. They're saying they're seeing a recovery in the long-haul market for Lufthansa. Howden Joinery, that is DIY and kitchens. That one getting hit in London following some weakness. And finally, ING actually lower. They did do a big buyback, but the net interest income is weakening a bit. Costs are also higher. Earlier today, we spoke to the CFO of ING, so let's have a listen now.
It's been a good quarter for us. We have generated strong revenue growth, 32% increase year on year. Our cost trajectory are beginning to come down as inflation comes off. Risk costs are doing well. All of that adds up to strong profits, strong capital generation, and that strong capital position allows us to do this share buyback of $2.5 billion, and that is really our second share buyback this year.
So that was the ING CFO speaking to Bloomberg. As I say, that stock down around 0.6% at the moment. It has been a bit of an underperformer over the past year, and that is continuing this morning.
Joe, you set yourself up for this. Chelsea, well, 11th in the Premier League.
I should
Joe,
start.
how many points? 12 points. Arsenal just need to focus. Arsenal number 2 in the league. They're going to catch up. They'll be top of the league after Tottenham. 24 points for Arsenal, 12 for Chelsea. Joe.
No chance. We're never going to recover from that. If we get 40 points, we'll stay up.
I'm glad you're being realistic, Joe. Joe Easton from Equity Team, thank you very much indeed. Let's stay in the UK then and focus on the Bank of England. The central bank action, of course, switching focus to the BOE, to Andrew Bailey and team. And Bloomberg Economics and every economist there expects a hold, of course, in terms of the rates at 5.25%. Let's get the context, the analysis with Bloomberg's UK correspondent Lizzie Burden. Lizzie, what are you going to be listening out for today? A done deal in terms of what they do with hikes seems to be the view, but we can get an update on forecasts.
Yeah, that's the view from markets and economists, but it could actually be a three-way split because you've got some very hawkish opinions on this committee and the very dovish Swati Dhingra as well. She reckons only a quarter of the hikes so far have fed through, which is obviously less than the chief economist Hugh Pill reckons. He says it's about half of hikes so far. In terms of the guidance, we're expecting a copy and paste job here, that rates will stay sufficiently high for sufficiently restrictive for sufficiently long. So this Table Mountain idea that we're going to stay at this peak for a long time. If that's not forward guidance, if that's not a dot plot, I don't know what is, but that's another matter. So if we're not getting a hike today, it puts the forecast really on the forecast, as you say, and whether the Bank of England is going to reckon the UK economy is in for a recession, and therefore when the rate cuts are coming. Now, Andrew Bailey says it's premature to be talking about rate cuts, so echoing Christine Lagarde there. But what will be really interesting for markets is if you see the Bank of England expecting that inflation will fall below the 2% target at some stage. That would mean probably that investors would double down on their bets for rate cuts. It could spark a rally in gilt, and of course it wouldn't be good for the pound.
Lizzie, thanks very much. Lizzie Burden with an update on what to watch for from the Bank of England. We will bring you the Bank of England's rate decision live at 12 o'clock UK time, followed by Governor Andrew Bailey's news conference. That's at 12:30 p.m. UK time. Joining us with thoughts on the same subject, Rob Wood joins us, Chief UK Economist at Bank of America Merrill Lynch. Very nice to speak to you this morning. Robert, let's get into this conversation then, and a lot to focus on, as Lizzie said, even if we're not expecting a change in rates overall. But let's start with this issue of the vote split. So you're actually looking for something that looks like 7-2. Last time we saw 5-4, so it's pretty close. What's changed that makes you lean to 7-2 and not a three-way split, as Lizzie was mentioning?
Sure. So I think they're going to leave rates unchanged. I think that's absolutely nailed on. A lot of the data that they've had since their last meeting has either been in line with their forecasts or a little bit softer. Why would you shift to a slightly more dovish vote? I think it's just that growth looks a little bit weaker, unemployment a little bit higher than they expected. Two of the things that the people voting for hikes last time focused on was the resilience of consumer confidence and forward-looking indicators in the PMIs, which said it might not be great now, but things are going to improve. Both of those things have softened. We've also lost one of the hawks as well, who has left the committee to be replaced by Sarah Breeden. So I think that loses you one hawkish vote, and I think there's a risk that one of the others shifts to hold. Look, they've already held for a month now. The data haven't really strengthened since then. Are you going to restart now? I think just the bar to voting for another hike now is a bit higher.
Lizzie kind of nodded to this, that for some in the markets, the focus will now be on looking ahead to the next cut, or at least to when the BOE cuts. And you're saying, hold on, hold your horses. You're not seeing one in 2024. You don't see it happening until 2025. Why?
The UK, I think, has probably the biggest problem with persistent inflation among the developed market economies. We've got higher CPI inflation, we've got higher wage growth. I think there are signs that inflation expectations have been unsettled, modestly de-anchored. I don't want to say they're hugely de-anchored. I mean, it's not like the anchor is gone. But certainly I think consumers are much less certain about where inflation is heading. That's a problem for the Bank of England bringing inflation back to target. The economy, while it may be contracting very slightly in the third quarter, I mean, broadly speaking, it's stagnating here. Unemployment is very low. So I think they're going to have to hold rates in restrictive territory for some time here. Now, markets, of course, are going to look for when the cut is, because it seems the Bank of England is done with hikes. So the next direction is probably down. The question is when. I think it's going to be an extended time out till 2025. Markets are starting to look for the second half of 2024. I mean, not entirely unreasonable, but I think it'll be a bit later.
OK, so you think we don't get a cut until 2025, but you do think that the Bank of England is more tolerant of inflation than other central banks. What tells you that, other than the fact that inflation is higher right now?
I think that's what markets are telling us. So market inflation expectations are above target. They've been rising since 2016. It's 0.75% above target. You do surveys of people in the market. They say they see a big upside skew to UK inflation.
Out over what kind of time horizon? Is that all the way?
5-10 years. Right. And it's really unusual relative to other central banks. Now, I mean, it's a 0.5% upside skew. Again, keep it in context. But I think what markets are telling us is they've seen what the Bank of England's done over the last 18 months. They've seen data on inflation expectations and wage growth, and they think there's a risk that this will hang around, that inflation will be a bit harder to defeat than the Bank of England has in mind. That's why I'm looking for them to hold until 2025, rather than cutting maybe 6 months earlier as the market has.
You say you're also looking at the politics of the UK as well, looking hard to the election. That, of course, may be called at some point in approximately the next 12 months or so. But you also say, interestingly, that you're looking for stimulus or potentially any nods or moves towards stimulus. Where would that come from? There's no room. The consensus seems to be that Labour, Conservatives, they don't have room to stimulate this economy. So why is that important for you?
Well, it's the interesting question, right? How do you ease policy when you've got no room against the rule? I think with an election coming up, with the polls where they are, you can see from the press over the past couple of weeks the pressure is going to be high to cut taxes ahead of that election. I think the fiscal rules and the fiscal outlook probably leave relatively little room for that. But what we've also seen when applying those fiscal rules is that the government is prepared to put in very, very tight spending plans that probably most observers think will be hard to deliver in order to manufacture room against this rule to ease taxes.
Do you think that's underpriced by the markets, a tax cut?
Yeah, I do. I mean, I think clients are beginning to come around to this. I think the focus is on whether policy will be eased. I think that does set the UK a little bit apart from some other countries, and I think it will be a really crucial moment in this fight against inflation. If fiscal policy is eased in the spring, I don't think that helps much. Now, you're absolutely right. There isn't huge room against these fiscal rules. There's only so far you can really push these spending plans down. So we shouldn't expect a big bazooka here, but certainly some easing, I think, is likely. And I think that pushes in the wrong direction for inflation.
OK, Robert Wood, thank you very much indeed on the analysis, the views there around the trajectory for the UK economy. Maybe some stimulus coming through as we build up to that likely election. Chief UK economist at Bank of America, Merrill Lynch, and the views on the BOE as well. Thank you very much. Coming up, Novo Nordisk's earnings surge on hot demands for its diabetes and obesity drugs. We're going to break down the details of that story next. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
On the next episode of the Business Week Show.
Ambition. When is ambition something to revel in and celebrate?
As long as ambition has a spiritual and moral dimension to it, it's a beautiful thing.
I decided to go up against the advertising industry.
And you tell me you're not ambitious.
No, that's not ambitious. Hey, can I get a...
Watch the Business Week Show. Thursday nights, 10:30 Eastern on Bloomberg Television, or 8:30 on Bloomberg.com, or the Bloomberg app on connected TVs.
think it's pretty clear that UBS is now a bigger and a much more formidable player in the European and in the global markets. As I said, we always had that scenario as a scenario that would be worthwhile pursuing. Again, I'm not going to talk about details because I haven't been around. I am occasionally called on by the Swiss government when they have an offsite, and so I'm in regular contact with the authorities there, but that's a confidential discussion that we have, and I wouldn't take that public. But I do think that UBS is now catapulted into a league of banks where, even more than in the past, it can actually be a good rival for the major U.S. banks, both in the European and Asian markets in particular, but also on the U.S. home market. And I think that is something that the bank has been preparing for many years. It's like with sports. You're never good if you don't prepare. And so it was well prepared. And I have all the confidence in the current leadership that they will excel and make this opportunity really a great future for the bank.
That was the former UBS chairman Axel Weber on the future of the Swiss bank. Let's turn to earnings stories this morning. And Novo Nordisk's third quarter revenue has surged 38%, beating estimates. That's thanks to bumper demand for its diabetes and weight loss drugs, two of those, of course. Let's talk now to Bloomberg's Chloe Mele, who joins us this morning with analysis of what we've heard. Good morning to you, Chloe. So looking ahead, after the strong performance we've seen reported this morning, what should we expect from Novo Nordisk for the next few quarters?
Yeah, so by all accounts, Novo Nordisk is doing really well. It raised guidance last month. It had a really strong third quarter. Really looking ahead, the only sort of shadow or challenge is going to be supply constraints on Wegovy and Ozempic. It said this morning it was anticipating further periodic supply constraints there, and it was boosting capacity to help that. So given that demand really is showing no signs of abating either, that's going to be a key challenge going forward.
Okay, so meeting that demand is a key challenge for the team at Novo Nordisk. What about the key catalysts that investors are going to be watching for then from now on in?
So another thing that they're looking for is insurance coverage of those drugs, and also the cardiovascular benefits of Wegovy. So there's going to be more detailed data coming through this month about that.
Okay, and what about for other parts of the market? What about for demand for the food and beverage sector, for example? It seems in this earnings season, this has been a much talked about theme. We've heard it from some of the big fast-moving consumer goods companies in the United States, for example.
Yes, so analysts and investors are anticipating the sort of knock-on effect that the growing popularity of what are essentially appetite-suppressing drugs are going to have on consumer staples, on food and drinks, on alcohol, etc. So that might drive some downgrades of some stocks, for example, in the alcohol sector, or fast food or something like that. So that's something that's going to be really a key focus as this gold rush around weight loss drugs continues.
Yeah, it's really fascinating to hear from the likes of Dunkin' Donuts and Krispy Kreme saying, hang on a second, this is going to impact demand for our sugar-rich donuts. All right, Chloe, thank you very much indeed on Novo Nordisk. The stock, by the way, up 2.3% on the back of those earnings. Chloe Mele there joining us with the context. We're going to be speaking to two top executives from Europe's most valuable company, Novo Nordisk, later. The CFO at 9:30 a.m. London time, and the CEO is just after 1 p.m. Stay with us. This is Bloomberg.
Swinehart is supremely skilled at navigating the rapids of real estate. That's important because real estate development is the next frontier in the business of sports. Fenway Sports Group has a blockbuster project in the works.
We have 5 acres to play with here. And when all is said and done, we expect 2 million square feet across residential, commercial, retail.
Given the track record of Messrs. Henry, Werner, and Gordon, the Fenway Corners plan comes with high hopes of success. That doesn't mean it will be an easy lift, especially right now.
What have you learned with the dynamic move of the interest rates? Do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
Julie Swinehart took me on a walking tour into the future.
This is going to become the true entrance to Fenway Park. And that's part of the attractiveness of this project is the age-old recipe of increasing dwell times, bringing fans to the park, bringing in businesses, maintaining what's here and preserving some of the historic nature of what you see around you, but making it even more accessible, making it more fan-friendly.
This is Markets Today, 30 minutes into your European trading day. Here are your top stories. Holding steady, European stocks and US futures climb after Jerome Powell hints the Fed may be finished with its most aggressive tightening cycle in 4 decades. Following the Fed, investors also expect the BOE to hold rates as evidence mounts that the UK economy, labour market and inflation are all weakening. Plus, Novo Nordisk gains after profit tops forecasts as sales of its obesity and diabetes drugs surge. We'll be speaking later today to the CFO and the CEO. So risk appetite, it seems, reignited, Tom, in these markets by maybe a dovish interpretation of the Fed, maybe the weakness in the manufacturing data. We saw that in the States yesterday and we see it again in Spain today.
Yeah, the bad data is good news for these markets. The Spanish data, manufacturing PMI coming in, pretty ugly print, 45 around thereabouts for manufacturing PMI for the most recent month, below the 47 that it marked up the month prior to that. So just a reminder of the manufacturing squeeze that's happening not just in Spain, but across the Eurozone. But Spanish manufacturing now firmly in contractionary territory, and just a reminder of that with the print today. So the weak data arguably being seen as good news, and we're seeing that reaction across the bond markets as well. Very solid gains across these European equities now on the optimism, the Fed-fueled optimism. The earnings story is part of the mix as well, of course, and we can touch on that when we break down the sectors. Across the benchmark then, adding about 1.2% so far this Thursday. The DAX adding 166 points. Here in the UK, the FTSE 100 adding 1%, looking at 7,415 on the FTSE 100. Let's break down the sector story then, because basic resources is interesting. The energy story is interesting as well, given the results that came through from Shell, the estimates, the results, the earnings coming in line with the estimates, but the announcement of a $3.5 billion buyback, and then the optimism around Novo Nordisk as well, and its outlook for those obesity drugs. Travel and leisure up a full 1%. Auto's getting a really big lift as well, getting 1.5%. Lower yields as constructive for that sector. But look at the gains coming through for technology now. It's not just lower yields, but it's also the forecast, the outlook from the likes of AMD and Qualcomm as well. Don't forget, Apple earnings drop later today. The iPhone 15 demand story is going to be interesting, as in the China demand picture as well. But tech soaring, 2.3% is the gain coming through there. Consumer products up 2%. Basic resources now gaining 2% as well. So across these sectors, very solid gains so far this Thursday. The standouts, again, being technology, industrials, basic resources, and the consumer. Again, across the benchmark, you're seeing gains of 1.2%. Anna.
That is really strong follow-through, isn't it, for European tech on those global tech themes as you lay out. Also in focus, the energy sector this week. Shell shares gaining this morning. The oil and gas giant announced a $3.5 billion share buyback program. That's after it reported an adjusted profit for the third quarter of $6.22 billion, in line with estimates. Joining us now here on set, Bloomberg's Laura Hurst with analysis of what we've heard from Shell this morning. Laura, good morning to you. Run us through some of the highlights in these earnings then, as well as, crucially, how they did on gas trading, because that was such an area of weakness for BP.
Yeah, exactly. So quite a boring set of results in that it met expectations, but that's not a bad thing. And, for investors, they're happy because they've got 3.5 billion buybacks, which is more than they had guided on. They'd initially said 3 for the quarter. So that's a good thing for investors, and they're happy their returns are continuing at a solid pace.
Hang on, the buyback wasn't boring, was it? 3.5 billion? I mean, it's well above the BP number, 1.5 billion. So 2 billion above BP. There's also the idiosyncratic story, of course, around Shell. But what does that tell us about their ability to return cash to shareholders in the quarters ahead?
Yeah, this is something that really has turned around for the company. If we look back a couple of years ago, their return on average capital employed was like 3%, really paltry. And now it's well over double digits. They're piling money back to investors through dividends and buybacks, and it's at a higher rate than their peers, European peers at least. So that's exactly what sort of activist shareholders like Third Point were after.
Yeah, what can we expect from the quarters ahead then, Laura? An interesting theme within the wider sector, of course, has been M&A. We heard BP being quizzed on this. Of course, they've got an acting CEO, so possibly less likely they'll be involved in some of that, but saying that they don't need to. And this has been very much a US phenomenon, the likes of Exxon and Chevron. How does that and other things feed through into your expectations for the fourth quarter?
Yeah, well, that's something that I'm sure the management team will get asked in their earnings call with analysts later this afternoon. But so far, their peers have sort of rebuffed suggestions that they have to go down the same route. Eni, Italy's major oil company, yesterday their CEO said, look, it's a different situation. In the States, they can do these all-share takeovers that we can't. So that gives them a big advantage, and we can do things organically. So I'm sure Sawan, the CEO of Shell, is going to have a similar approach.
Okay, thanks so much for the update. Bloomberg's Laura Hurst. Despite the numbers just meeting expectations, finding some interesting lines to take us through on the Shell story. Let's get to some of the other top red stories on the Bloomberg terminal this morning. Disney says it expects to pay at least $8.61 billion to buy Comcast's one-third stake in the Hulu streaming service. The statement marks the start of negotiations expected to last for months. The companies have previously said the final price will be settled through an appraisal process and is likely to involve up to 3 investment banks. A former Goldman Sachs investment banker has been sentenced to 3 years in prison after passing confidential deal information to his squash partner who traded on it. He was found guilty of insider trading and obstruction by a federal jury in June.
Bloomberg has learned that JP Morgan is searching for a potential partner to grow its private credit business. Our sources say the bank's in talks with sovereign wealth funds, pension funds and alternative asset managers. JP Morgan is looking for third-party capital to supplement more than $10 billion already set aside for its private credit push. And Qualcomm has given a better-than-expected revenue forecast for the current quarter, indicating that the mobile phone industry's inventory glut may finally be receding. We seem to say that a lot, don't we? The sales estimate from the largest seller of smartphone chips sent shares higher in late trading on hope that consumers are finally beginning to upgrade their phones again.
Okay, coming up on the programme, will you be driving a Foxconn in a few years' time? The Taiwanese electronics giant is taking a gamble on the EV business. We'll talk about that next. This is Bloomberg.
this story did come around as something that's a bit different. There is a dark side to it.
It's hard to even talk to people about these chemicals and tell them, look, there's a chemical that's in you that's not found anywhere in nature.
We've all been used as guinea pigs for the last 70 to 80 years. We weren't told we were being exposed, but they did it anyway.
This right here is the shadow fleet. To actually see clandestine behaviour was really surprising. That makes you think, well, what else is going on?
A lot of people let Agnes down. What she was told is exactly what happened to her.
It took the lid off a much bigger problem. I think that's probably the most shocking part of this whole thing.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to The Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Welcome back. This is Markets Today. Happy Thursday. You're seeing gains, very solid gains across European stocks of 1.2%. US futures also pointed to upside of 0.4% on the S&P E-minis. Let's get to what's happening then in the tech world, the auto world, and how the two are merging. With demand for smartphones remaining muted, Taiwanese iPhone maker Foxconn is looking to diversify. It's going into the business of making EVs. This is the company, of course, for which Apple would not exist without Foxconn and its ability to produce things like iPhones and iPads. Bloomberg's Reed Stevenson wrote today's big take story on the subject. Reed, why then is Foxconn getting into manufacturing electric vehicles, and why now?
Well, up until now, Foxconn has made laptops, servers, they make the Nintendo Switch, they make the Google Pixel, and the biggest chunk of that is indeed smartphones, but that market is saturating and slowing at the moment. And so with a new chairman and CEO in place ever since 2019, they've kind of identified new markets to get into, and one of the biggest, and the one that they think they can make a difference in, is electric vehicles, and that's why they're getting into this game.
Okay, Reed, this question amuses me even before I ask it. Just how different or similar is it to make a smartphone an electric vehicle? And as crazy as that question sounds, I do remember years ago talking to the Ford CEO, and this was before electric vehicles were such a big thing, but it was certainly as more and more tech was finding its way into our cars. And he was saying you'll have to think in the future of a car as a smartphone on wheels. So I suppose they've become more similar.
Yeah, so you can come at this argument from sort of two directions. One is, indeed, a smartphone has a battery and a bunch of chips and a circuit board, and so do EVs, along with wheels and a motor, et cetera, et cetera. And so it's just an order of magnitude, slight order of magnitude, maybe more complex to build an EV versus a smartphone. And then, of course, on the other side of the equation, an EV has much fewer parts than a car, fewer moving parts, and so this should be easy. But there are some key differences. For example, quality control needs to be very, very good. Also, one of the stories I heard while reporting on this article was that, if something's wrong with a smartphone, you can kind of pluck it off the production line, but you can't exactly do that with, a 3,000-pound vehicle. And so there are a lot of sort of just physical challenges involved with that. And, one of the analysts I spoke to made another really good point, which is that, you can always reboot an iPhone, but you can't reboot an EV going at 100 miles an hour.
Yeah, that would be a slightly concerning prospect, wouldn't it, Reed? What does this all lead to then? There's been a lot of speculation over the years about the Apple car and God knows when that's going to happen. If that happens, we know they have a team focused on it. Is Foxconn the company that comes and builds the Apple car?
Well, I think, that is really the big question. If Apple has been working on a car reportedly for the better part of a decade, our latest reporting indicates that it could come by 2030. But I think one of the things to consider here is that, Foxconn needs to build expertise if it wants to win a contract like that. It's going to have to show that not only can it pull it off, but it can do it at scale and at volume and sort of deliver the same quality product that Apple expects when it places orders for iPhones.
Okay, really, really interesting. Reid Stevenson on the big take of the day. Thank you very much indeed. And of course, you can read that big take. Just go and type in NI Big Take on your terminal, or check out, of course, the website for the online version as well. Sticking with technology, Google DeepMind CEO says it is necessary to proceed with, quote, cautious optimism when considering artificial intelligence's future benefits. I spoke to Demis Hassabis at the UK's Global AI Safety Summit yesterday.
I think the message that we bring is one of cautious optimism. Obviously, we're working on this technology because we think it will be one of the most beneficial technologies to society ever. But it does come with attendant risks, as all transformative technologies do. And I think we need to take those seriously, ranging from the near-term risks to the longer-term technological risks. And I think we need to start an international dialogue about that now. So it's fantastic to see this happening in the summit.
And there is divergence from policymakers, but there's also divergence and quite passionate splits within your own community. You're very aware of this. The head of AI at Meta, Jan LeCun, saying, name-checking you and saying you're fear-mongering, there's maybe regulatory capture going on here. Your response to that critique, because Jan LeCun isn't alone, there are others who say, quote-unquote, it is preposterous to talk about some of these existential risks, fear-mongering. Is that what you're doing, Demis?
No, of course not. And there's equal luminaries on the other side of the camp as well, including some of Jan's fellow Turing Award winners. And we've all known each other for a long time, actually, from the academic community. So, and as far as sort of regulatory capture and other things, I think that's pretty preposterous. Myself and Shane Legg, one of my other co-founders of DeepMind, have been talking about AI safety since we were postdocs and academics in 2009, so before we'd even started our companies. So I think it comes from a genuine, actually, uncertainty around where the technology can go. It's enormously powerful, we know, and that's why we all work our whole lives on it, all of us. We think it can bring incredible benefits to science and medicine and climate, environment, and can actually help us and help society face some of our greatest challenges and solve some of those challenges. But, in terms of where the technology is going to go and the capabilities it will have, there's a lot of uncertainty around that. And I think it's good there's disagreement, and even amongst the academic fraternity, and that just shows you that's why we have to proceed with cautious optimism. We want to make sure we get the benefits of the innovation and the promise that the technology clearly holds, but we've got to be doing a responsible way, I would say, using a scientific method, trying to have as much foresight on the technology as possible, so we predict ahead of time what the unintended consequences might be.
I guess for some it's the emphasis, and the Deputy Prime Minister himself, speaking to us earlier, said this is very much this summit focused on frontier technology, so the next models that DeepMind and others may be coming out with in the next 12 months or so. Others would say, look, we need to focus on the more prosaic risks of the here and now, the misinformation, data security. Those issues are not being given enough weight, the critics would say.
Yeah, I don't agree with that. I mean, I think that actually even in the summit there's many sessions on the near-term risks, and all of us in the Frontier Labs are also thinking a lot about near-term harms and how to mitigate those.
That was the Google DeepMind CEO, Demis Hassabis, speaking, of course, to Tom just earlier this week. Let me just get to some breaking news across the Bloomberg terminal this morning. We're following the manufacturing story and the weakness of that globally, and now it's Italy's turn to feed into that theme. So 44.9 is the latest manufacturing PMI data that we have from Italy. This follows a weak print from Spain, a weak print we got from the United States yesterday. Our colleague Mark Cudmore telling us that this was actually part of the reason that we saw stocks rally yesterday, because it it led to lower expectations for what the Fed does. So how is this feeding into the Eurozone ECB expectations? Well, the Euro's not moving much this morning. We might be seeing a little bit more movement on bond markets, or maybe that work was done after the weakness in the inflation prints we got in recent days. Coming up, we'll talk more about macro themes, but pivot to the Bank of England. It's likely to follow the Fed in holding rates steady later on today. The focus now turns to the forecast. We'll discuss that next. This is Bloomberg.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. It is then the market forces and the business incentives of global companies that transform that EU rule.
Names in global leadership are on Bloomberg.
The conflict between the US and China has escalated so much. This is one of my greatest fears, that a small nation is forced to choose sides.
Bloomberg. Context changes everything.
The immaculate disinflation. We usually think you need a weak economy to pull the inflation down as rapidly as it's been falling.
Clearly what the market saw was a preference for the worry of tightening financial conditions. We're at sufficiently restrictive. We can be done.
The risk is that inflation is too stubborn. If I were recommending or talking to Jay Powell, I would recommend that he leave the door open to doing more.
Our concern is sort of around May and June, where is the Fed going to be? And I think the optionality to have rate hikes still on the table and that every meeting's live is really important.
If you've taken a break for, let's say, 6 months, and the evidence accumulates that monetary policy is not as tight as you think it is, and inflation expectations are starting to become an anchor, labor market's not loosening, wages are stuck at 4.5%, then it's unlikely that 1 quarter point move is going to be sufficient to do the job. So I think it's either zero or multiple rate hikes.
Okay, some of our guests there reacting to the latest Fed decision. When it comes to the ECB, the data, of course, added the Eurozone importance, and the line coming from France in terms of the latest manufacturing print for the month of October. PMI, manufacturing PMI coming in at 42.8 for France, just marginally above the pre-lean number. But this is the lowest print in terms of manufacturing PMI for France in at least 3 years. And it's worth noting that France and its manufacturing sector have not been in expansionary territory since January of this year. That's when you got a print of 50.5. So what a move from 50.5 back in January to 42.8 now for France. And a reminder just of the softness of course, the Eurozone's second largest economy. The euro dollar not moving a lot on the back of this. It's currently up 0.3%, largely on softer dollar, it seems. On the context then, the analysis, let's bring in Bloomberg's chief European economist, Jamie Rush. Jamie, how has the data then evolved since the ECB's last meeting? Does this solidify the Dove's views that the ECB has done enough, given the weakness that we're now seeing across the Eurozone?
Yeah, I mean, I think it does. It certainly supports that narrative. I mean, I think the reason we're not seeing markets move in response to this data is because the ECB was pretty much guaranteed not to do anything anyway for the rest of this year. It seemed pretty clear to us that they'd signalled that the hiking cycle was at an end. So really, it's not going to change the ECB's policy decisions over the next few months. I mean, I think the big question is, when you look at manufacturing PMIs, you normally think that when you enter a recession, it's manufacturing that goes first, then services. So is this telling you that there's a deep recession coming? I think probably no, because there are some unique circumstances this time around. Global demand's falling off for manufacturing exports, for example, which mean that there isn't such a clear link, but still it's flagging some risk to the ECB.
We'll get the German data and see if the same applies there. We have had some weakness in that story, haven't we, Jamie? But let's go a bit more global then and think about the Fed and how that plays into the calculus at the Bank of England today. Expectations in markets are really for no change, but there could be other areas of interest.
Yeah, I mean, I think the markets have pretty much ruled out a hike. They had priced in about a 10% possibility before going into the Fed meeting, so that has altered markets' perceptions of what the Bank of England is most likely to do. I think central banks don't like to admit it, but they all look at the Fed, and none of them operate in a vacuum. And so the Fed's decision and the signal that they are probably done hiking as well has an impact, both because there are legitimate reasons, because the currency, of course, is under less pressure if the Fed doesn't hike, so the Bank of England doesn't have to hike to match it. But there's also reputational management considerations as well. And again, they wouldn't admit it, but if there's a big recession coming, which there might be, would you want to be the last central bank still hiking? The answer is probably no. So I think it affects people's decision making in more ways than one. It's not just economics.
Jamie, when it comes to whether we look at a cut from the BOE as being the next move after today, we were speaking to Rob Wood at Bank of America Merrill Lynch. He doesn't see cuts coming through until maybe early 2025. He doesn't see them coming through next year. Does that align with your view?
It doesn't. I've got a lot of time for Rob, but I think it seems likely to us that inflationary pressure is going to ease off sooner than that, and that will open the door to rate cuts probably from the middle of next year. And if you get a big slowdown in the economy that people aren't really forecasting right now, but if that were to happen, that would bring that timeline even sooner. And of course, it will depend a lot on what other central banks are doing, as we just discussed. So if the Fed starts cutting in the middle of next year, is the Bank of England going to wait another 6 months? I would guess probably no. So we'll see. You have to keep an eye on the data on both sides of the Atlantic to get a feel of what's going to happen, I think.
Okay, Jamie, thanks very much. Bloomberg's chief European economist, Jamie Rush, joining us there with analysis on the European story. And just to complete the European story, we've got German manufacturing PMI coming in almost in line with estimates, actually a touch stronger, but at such a weak reading, 40.8. So maybe a relief to some that we're not dropping down into that 30 handle again, but 40.8 against an estimate and a prior of 40.7. On the subject of the Bank of England, which we were hearing about there from Jamie, we'll bring you that Bank of England rate decision live at 12 o'clock UK time. That's followed by the Governor Andrew Bailey's news conference at 12:30 p.m. UK time. We'll be speaking to Bank of England Governor Andrew Bailey. That interview at 4 p.m. UK time. A lot of focus on the detail, on the vote split there, of course. Meanwhile, stocks are strong.
Stocks are strong, and part of that is down to the central bank story. Part of that is down to what's happening in the gilt markets here in the UK, with yields coming in sharply, around 8 basis points at the front end. Similar picture on the 10-year as well. And that is seemingly playing into what's happening in the real estate sector, as across your sectors in Europe. Storming gains of 4% across the real estate sector of Europe. Every major sector, every sector is in the positive territory. And across your European benchmark, gains of 1.4%. Here in the UK, you're adding 88 points. There's a stronger performance, though, coming through for France. The CAC 40 is up 107 points above 7,000. US futures pointing to gains as well. S&P E-minis up 0.5% on Fed-fueled optimism. Plenty more coming up. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
Good morning from our world headquarters in New York. I'm Menace Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Markets rally on Jerome Powell's hints that the Fed may be finished with its most aggressive tightening cycle in 4 decades.
That's the question we're asking is, should we hike more? Slowing down is giving us, I think, a better sense of how much more we need to do if we need to do more.
Next up, it's the Bank of England. The central bank may hold rates as evidence grows that the UK economy and the labour market and inflation are all weakening. And the earnings season rolls on. Novo Nordisk sales surge on the frenzy for obesity drugs. We speak to the CFO live this hour. A very good morning. We've got breaking news. We've had it from Germany. We've had it from France. We've now got the composite Eurozone area. Euro area October manufacturing 43.1. The preliminary was for 43. So just ever so slightly better. There's euro dollar at the moment, as you can see. France is contracting for 9 months. Germany's contracting for 16 months. We know there's a recession, so it's a question of how brutal it is in the manufacturing side. But there's a little bit of a better bid to the euro this morning, euro dollar up. But of course, it was those words, we've come very far, that shifted the dynamic for the bond market. 23 basis points in the space of 2 days. We're shifting another gear this morning on those bond markets. The bond market is doing our dirty work for us. Let's have a look at the cross assets this morning because, of course, we continue with the movement in the bond markets. 495 on the 2 years. Now, the quarterly refunding was less than the market estimated. That, of course, will impact the longer end of the curve. But I like what JP Morgan had to say. The Fed and Powell was the happy warrior because, of course, he used the phrase dots decay, trying to take the heat out of another hike this year. So they're in this quasi-pause to hold mode. JGB's at the bottom of your screen. So, of course, as you see a shift in the yield on the downside for the bond market in the United States of America, that also has implications for the Japanese bond market in terms of a lid. The dollar rolled down yesterday. It's a 2-day drop down by 0.4%. Steve Englander says there's still a vulnerability in the dollar because there's still a little bit of a risk that we're not done with cutting yet. They're trying to shift to this pause mode. Dollar yen, it's worth reflecting on 150. I mean, it's music to the Ministry of Finance's ears, isn't it? It's music to their ears that the Fed could be closer to the end, and that helps them perhaps with this dollar rolling over and helps them with their yen. Danny, good morning.
Good morning, Manus. Yeah, this idea that they just kind of have to bank on the global bond market rally, not a continued sell-off. Well, let me tell you, the sell-off from bonds yesterday, it was received with big old wide open arms by the equity market. A rally of more than 1% for the S&P, nearly 2% for the NASDAQ. That continues on in the future session, up 0.5%. Your VIX, it falls back below 17%. In fact, we started the week above 20, above 21%. It shows you the relief, the sigh that's taken place in this market. But Manus, the issue is that the earnings season has been, shall we say, spotty. Bloomberg has run the numbers. A majority of companies, like we've never seen before, are talking about weakening demand on their earnings call. Should the pace of mentions continue, it will be the most talk of weakening demand since at least 2000. That's what our data goes back to. So there's a concern. We're going to get Apple after the bell today. That's going to be the next indicator, at least for what tech is doing. And Manus, because Europe was, the U.S. was off having a party in the equity market while Europe was closed, we're catching up this morning, up nearly 1.5%. Novo Nordisk helping that. Strong sales, you'd mentioned that. They're up about 2% so far this morning, adding to the rally in Europe. Manus, as we're debating this idea of the rally continuing in bonds, I do want to reflect on the MLive poll survey right after the Fed decision, about 160 respondents from the terminal. A majority of the respondents, I think we have the graphics for this too, did say that they don't think yields have peaked yet. That's these two groups here. Now, the majority of them, Manus, think that we won't go above 5.5%. That's this. But here's the thing. Was yesterday just a flush out of positioning, or was it the peak is in? Again, our respondents from our survey say, nope, the peak's not in yet.
Well, I mean, if you reflect back on what Feroli said over at JP Morgan, he referred to this happy warrior kind of syndrome that Powell had. The question that goes through my mind is whether they have just undone the brutal work that they've had to put in. I mean, this bond market has done 0.75 percentage point of rate hikes. Have they done the usual thing, where they run the risk of losing credibility, having made those kind of comments? Pretty significant progress on inflation. Wage inflation has come down significantly. I feel good about that. We're not interested in how people feel. We want data, and we want something much more exacting. Danny.
Yeah, it's a really good point. They're cheering on a market doing the work for them. Does this rally mean, as you say, the work's undone?
Exactly. Well, of course, next up, it's the Bank of England. They're likely to hold interest rates after evidence that the UK economy and inflation is weakening. Joining us now is Lizzie Burden. We are going to see what really happens in a short while. But the economists and the investors, we had one guest yesterday who says another 2 hikes are what is needed to defy and kill off inflation in the UK. Good morning, Lizzie.
Morning, Manus. Well, that's not what markets and economists are expecting. They're expecting a hold today, and we're actually at this peak of Table Mountain. All this talk of mountains sounds a lot like a dot plot to me, but never mind. The idea is that the guidance from the past meeting will just be copied and pasted over, sufficiently restrictive for sufficiently long, which would mean that the focus today won't be necessarily on the decision, but more on the updated forecast alongside it, specifically whether the Bank of England sees a recession on the horizon for the UK economy, and therefore whether it's going to cut rates. Now, the Governor, Andrew Bailey, has said that talking about rate cuts is premature, so echoing Christine Lagarde at the ECB, but markets are pricing 2 rate cuts next year to 4.75%. What will be really interesting, Manus, in this forecast is whether the Bank of England sees inflation dropping below its 2% target, because that could mean that investors double down on these rate cut bets. It could spark a rally in gilts, and of course it wouldn't be good for the pound.
I mean, I'm just looking, Norges Bank just out with their decision saying that they see their policy rate likely raising in December, despite the fact that they've held today. I mean, you do have central banks talking about the resurgence of inflation, and we're debating weak data here in the UK. I mean, is the UK going to be an outlier here where perhaps they're one of the first to cut?
Possibly. You've got the Dove on the committee, Swati Dhingra, making the case that only a quarter of hikes have fed through so far, but you've also got the chief economist, Hugh Pill, saying that's actually closer to half. You've got an unknown quantity on the Monetary Policy Committee at this decision in the form of Sarah Breed, and she's replaced one of the hawks, John Cunliffe. So it'll be interesting to see how she votes. The expectation is that she's going to vote with the majority, the internals, going for a hold, but watch out, because we could get a 3-way split today.
All right, Lizzie, staying dry inside. I'm happy about that, too. Lizzie Burden here covering the BOE. It is a very rainy day over at Threadneedle Street. And, of course, tune into our special coverage of the decision, 8 a.m. Eastern, plus our interview with Governor Andrew Bailey. That's at 4 p.m. here in London. All right, let's get you set up with some other top stories that are trending on the terminal this morning. Shell, Manus, is accelerating the pace of share buybacks as third quarter profit rises on a combination of higher energy prices, strong gas trading, and wider refining margins. The company's performance, which matched analyst expectations, caps a mixed earnings for big oil.
Well, Disney expects to buy Comcast's one-third stake in Hulu for around $8.61 billion. The statement marks the start of negotiations expected to last months. The companies have previously said that the final price will be settled through an appraisal process and is likely to involve up to 3 investment banks.
And Vanguard is taking its last steps to exit China and shut down its office in that market. As Vanguard reverses its strategy in China, competitors, including BlackRock and Fidelity, have boosted their onshore presence, betting on the nation's economic growth and pension reforms.
The U.S. President Joe Biden says Israel and Hamas militants should pause fighting in order to allow to free hostages held in Gaza, but stopped short of supporting a full ceasefire. He spoke at the opening of the Rafah crossing yesterday.
Safe passage for wounded Palestinians and foreign nationals to exit Gaza has started. The American citizens are able to exit today as part of the first group of probably over 1,000. We'll see more of this process going on in the coming days.
Oliver Crook is on the ground in Tel Aviv. Oliver, the latest developments, you've just heard from the president there. 600 people are expected to leave Gaza, and of course these will be foreign passport holders. The latest, good morning.
Yeah, so Manus, what he was alluding to was yesterday the first flow of human beings that are actually leaving Gaza into Egypt. There were 2 categories of people. There were the wounded that were carried out by Egyptian ambulances to a field hospital in northern Sinai. But then the second, as you mentioned, the foreigners, the first foreigners able to depart. And we got the list today overnight from the Hamas Crossing Authority of 596 names of people that will be permitted to cross again today, 400 of whom will be American citizens, and then the others will be from other nationalities. We understand that the Egyptians are preparing for as many as eventually 7,000 people to cross that border in the other direction. We understand that this was also in part brokered by Qatar. And again, let's also focus on what's been going on the ground in terms of fighting. It has been concentrated, continues to be concentrated in the northern part of Gaza. And we understand from the IDF that the forces of the Israeli forces have reached the sort of outer gates of Gaza City, and that is the state of play this morning.
We also are expecting Blinken back in the region tomorrow. Oliver, how are diplomatic efforts progressing?
And you have to imagine what this is for Anthony Blinken. So now he's going to return tomorrow. He's going to be in Israel, but he's also going to be in Jordan. And what has changed since his last visit? Well, a couple of things. For one thing, you're much further from the attacks of October the 7th, which is going to make a difference in terms of where people are paying attention to the events from the 7th to what is happening today. And in that period of time, according to the UN, you now have 8,800 people in Gaza dead, 2/3 of whom are women and children. And this, of course, is going to dominate the attention of the international community, but also obviously in the surrounding countries. The Jordanians have pulled their ambassador to Israel yesterday, have recalled him. And remember, Jordan is one of the first countries in the region to make peace with Israel. That was back in the 1990s. We've had the comments from the king and the queen saying that the impression the West is giving is that Palestinian lives matter less. Of course, we also heard from Benjamin Netanyahu this week, who says there is absolutely unrelenting on the ceasefire. There is not going to be a dial back of the military presence, but does this perhaps, if you're not going to pull back the military, give more incentive to get more aid and potentially these humanitarian pauses some consideration?
Okay, well, certainly the nuance is there, isn't it? The president calling for a pause, but not a ceasefire. Oliver, thank you very much. Oliver Crook in Tel Aviv. Coming up in the show, we've got an earnings surge. We sit down with the CFO of Novo Nordisk on the growing demand for the obesity drug set. Danny.
And up next, first though, Manus, we're going to talk about the Fed and that BOE decision. Gordon Shannon of 24 Asset Management joins us. This is Bloomberg.
What did you learn in the last 40 years about leadership in politics?
Well, I've learned a lot about leadership for a very long time, observing it in others, recognizing what is needed to get the job done. And I always define it in this way. Know your why. You have to know why you're doing this, because you will be under attack, this for sure. Know your why, know what you're talking about, know how to get it done, think in a strategic way, and then that's all up here. And then also connect directly with people. If you can show them how important what you're advocating is and what you know you're talking about, so they trust your judgment, and you have a plan, you will have followers. You will be a leader.
Season is here.
Tons going on, lots of earnings.
Beat wherever you look.
Bloomberg breaks the numbers first.
It's a tale of two earnings. Results from Goldman Sachs, Bank of America, and Morgan Stanley.
Netflix is out, guys.
With exclusive expert analysis.
Recovery is underway.
They crushed it. It was one of their best quarters ever.
This is a story all about pricing power.
We're going to make more money. We're going to make more money. And we're going to make more money. We're going to make a bank. And I think that is what we can take away.
Bloomberg Television and Radio. Context changes everything.
Meeting by meeting, we're asking ourselves whether we've achieved a stance of policy that is sufficiently restrictive to bring inflation down to 2% over time. That's the question we're asking. We're looking at the full range of economic data, including financial conditions and all of those things that we look at. And then we've come very far with this rate hiking cycle, very far.
Fed Chair Powell speaking at yesterday's news conference, maybe a less hawkish tone than expected, plus a weaker ISM, plus a lower amount for the quarterly Treasury refunding allowed this huge catharsis in the bond market and a rally. Joining us now is Gordon Shannon, portfolio manager at 24 Asset Management. It was pretty breathtaking. I mean, the biggest drop in 30-year yield since November of last year. How much do you look at that and say, oh, great, the peak is in, we can rally from here, versus this was just a positioning clean out?
So I think the key is to look at the different announcements yesterday and the different forms of rally. So going backwards, we had that dovish pause, and from the announcement to the end of the press conference, about 4 bips came off the 10-year. Then before that, we had the ISM drop to the downside, biggest drop since 2014, and we had about a 5 basis point drop on that. But the biggest mover was the Treasury update, and that caused a 7-bip move when they announced 114 or 112 billion instead of 114. So it shows how much focus there is on supply. I don't necessarily see that problem getting much better. So that really is the overhanging issue here.
So is this, I mean, by the way, they're going to issue, good morning, Gordon, they're going to issue $40 billion of 10-year paper, which is up slightly from the last funding round at $38 billion. Are we going to choke on the supply? Is there a moment when this bond market really will choke?
I mean, I want to say that. I want to talk about Venezuela, but let's not jump there just yet. I don't even necessarily think we have to talk about the gilt crisis from last year. But I think when Yellen says it's not term premium, it's just expectations of inflation, she's talking her own book. It's clear now that there's not an infinite appetite for US Treasuries. So whether we choke, indigestion for sure.
Where my mind goes is if there's still going to be more supply, if there's not infinite demand, what happens to QT?
Yeah, well, that's that. Powell tried to kind of dismiss it. They're not going to change it. And in fact, people tried to draw on longer bond yields moving. How many rate hikes is that worth? He wasn't drawn on that. But no one's going anywhere near how many rate hikes is QT worth. And again, that's a huge overhang. When we look at what the Treasury's doing, they still have outside their normal range of T-bills. So they previously 15 to 20% would be the normal range there. When asked about that, they said, oh, well, that's just a rule of thumb. Oh, so we're going to go towards 25%. When are you going to fix this? When are you going to push things further? Or are they betting that those yields come down, betting/praying?
So, Gordon, if you look back over the history of guidance and rhetoric, transitory, they didn't get that right, did they? They really didn't get that right at all. I mean, they were way off in a distant land. Higher for longer, obviously that's shredded now. So is it higher for shorter? I mean, have they just... They've run the risk of losing credibility again by this. He's pleased with inflation. He's pleased with wages. It's coming down nicely. I'm not talking about cuts. It just smacks of a lack of credibility.
Yeah, well, they see this opportunity to have inflation down without recession, or it's not so much opportunity but hope. And it seems like they've decided to bet the farm on that. You're throwing away decades of credibility if you don't get it right. It's too early to tell. Things are going in the right direction, but whether or not wage growth plateaus at a level well above, sustainable for the target, that's still unknown. So he kept some optionality there for a hike in December, but it would really take quite a big shock.
Yeah. Well, not unrelated is that, a lot was made that they put tighter financial conditions in the communique. And talking about the bond market rally doing the work for them, Richard Clarida also brought this up yesterday, saying, well, they get themselves in a bind because what happens if the rally continues and then financial conditions ease? I mean, have they put themselves in a bind by referring to financial conditions?
I suppose they try to avoid the bind by Powell's focus on persistence of those. But yeah, financial conditions can go in both directions. And if they tell us, well, the long end's doing the work for us, so we won't, well, the long end will probably continue to come down, and then it won't. So yeah, it's a dangerous game to play. To be fair, that's why I tried to soften that. But it was a very dovish meeting overall for me.
Okay, so it was a dovish meeting overall. We can debate at the margins about credibility. Did you fill in your MLive survey in terms of the bond market retesting and having another punch at 5%? I mean, how frisky is it going to get in this bond market? You're worried about a bit of indigestion. You're so polite. A bit of indigestion in the bond market. So if I have mild indigestion and no Gaviscon, where do bond yields test again? Do they break 5%?
Americans don't know what Gaviscon is,
It's the purple stuff for when you've got indigestion. When you get older, Danny, you'll know all about it. She doesn't know anything about this old age thing yet. Right, come on, give us your calls.
Okay, so I was too busy preparing for the show to fill in the survey, but clearly 5% was a big technical level, and we bounced off that a few times, and there was some heavy hitters coming out, adjusting their books and talking about it on Twitter. But we could push through that. We could retest it. For me, it's a question of timing. Does the retesting of changes in expectations about the neutral rate, about term premium or supply happen before or after we see much worse data, the consumer rolling over, and the recessionary fears that would hopefully cause the rally in Treasury that a lot of people are depending upon.
Well, everybody's hoping for that, aren't they, Gordon? Thank you very much. Make sure you fill in your MLive survey the next time. Don't come on this show without having done it. Gordon Shannon there, 24 Asset Management, our guest this morning. There is an exclusive conversation to be had around this, Danny, isn't there? The Atlanta Fed President, Raphael Bostic, joins the Bloomberg team 3:30 p.m. Eastern Time, 7:30 p.m. London time on Bloomberg.
used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
On the next episode of the Business Week Show. Ambition. When is ambition something to revel in and celebrate?
As long as ambition has a spiritual and moral dimension to it, it's a beautiful thing.
I decided to go up against the advertising industry.
And you tell me you're not ambitious.
No, that's not Hey, can I get a...
Watch the Business Week Show. Thursday nights, 10:30 Eastern on Bloomberg Television, or 8:30 on Bloomberg.com, or the Bloomberg app on connected TVs.
This is Bloomberg Brief. I'm Danny Berger in London with Manus Cranny in New York. Manus, there was some disappointment over Airbnb earnings yesterday. Let me read to you what this company said that led to this. They said, we're seeing greater volatility in the fourth quarter, and they're closely monitoring the macro trends and geopolitical conflicts that may impact travel demand. My question for you, Manus, is you're in New York, the land of Airbnb. Is revenge travel over?
I would say probably they got the memo from you that you've actually run out of holiday leave on the system.
That's true.
And that this is, your time has run out. You've got no holiday left. And so that revenge travel syndrome is running out. But this is this is a much bigger story, isn't it? Which is whether the stimulus money is running out a little bit. The consumer, what was it you gave us yesterday? The consumer was under pressure. Consumer confidence is dipping despite the strong labor market. So this is critically important. The volatility, economic volatility, is dampening demand for travel. I can tell you what, the rents haven't gone down as a result of all this theory that they've opened up, Airbnb properties. Well, not yet.
Right. Well, I mean, I guess travel is a maybe, but you got to live somewhere. You got to pay rent or buy a place.
There's always space for you. There's always space for you here in New York. I can give you the couch. Emily Chang's going to sit down with the Airbnb CEO at 11:30 a.m. on Bloomberg.
I know one of the reasons you're here in Marrakesh and in Africa, because you see the enormous potential this continent has as a source of renewable power for electrolysis, right? That's the process by which hydrogen is extracted from water. Tell us about Africa's potential.
Africa's potential is the best in the world, and it's Africa's shot now. It's Africa's turn. What will stop Africa rightfully taking its turn will be lack of progress on technology. Companies and governments around the world choose Fortescue because we are the world leaders in technology, world leaders in next era electrolyzer design, cables, solar, all the tech which is moving our world on from having to rely on dinosaur era fossil deposits of oil, coal and gas to simply today's era of machines which make machines to harness all that beautiful renewable energy and give all the mobile energy, all the fixed energy this world could ever need by many times. Those countries who resist that are denying Africa their opportunity. And I'm saying, stop it. Let's get in behind Africa.
Welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. Markets rally. Jerome Powell hints the Fed may be finished with its most aggressive tightening cycle in 4 decades. Next up is the Bank of England. The central bank may hold rates as evidence grows that the UK economy, labor market, and inflation are all weakening. And earnings season rolls on. Novo Nordisk sales surge on the frenzy for obesity drug. We will speak with the CFO of Europe's most valuable company in just a few moments' time. Manus, the relief rally continues. S&P 500 futures up more than 0.5%. They liked what they saw from Powell, ISM, the quarterly refunding announcement, whatever it was, bond yields came in and equities rallied more than 1%. The VIX, a big sigh of relief. We're back under 17%. We started the week above 21, just to give you an idea of how much we have moved. The concern is, in these earnings calls, we are getting more mentions of weakening demand. When will that start to filter through perhaps some of the macro data? In the meantime, though, Europe picks up where the U.S. left off, up about 1.6%. Again, I mentioned Novo Nordisk sales, shares rallying there of the company with this frenzy around obesity drugs. And Manus, we will be speaking with the CFO very shortly.
We will indeed. Let's just put a little bit of imagery to that bond market move that you talked about. It was right the way across the curve, but the short end of the curve really reflects it over the past 2 days. We're giving back a little bit. We've come very far. Those were the words from Jay Powell, and they acknowledged the tighter financial conditions in markets, doing some of the legwork for them, but of course introducing financial conditions and credit conditions was the shift in the language. Roll it over, because you see at the 10-year government bonds, we saw the quarterly refunding come in at $112 billion. There's going to be $40 billion of 10-year paper. Let's have a look. We saw yields drop quite aggressively yesterday on the longer end of the curve. JP Morgan described a happy warrior on the markets. There's 10-year government bond yields are dropping ever so slightly this morning at 471 is where we are. We'll bring that to you. There you go. 471 is where we are at the moment. We just had Gordon Shannon with us talking about indigestion potentially from bond market supply. That's what's going to be the issue for you there. The dollar has a vulnerability to it, according to Steve Englander over at Standard Chartered. But of course, Powell really tried to sort of ram home the point that we're far from cutting. But his dovish tilt was certainly something that the market took very, very seriously. And so too did the Japanese government bonds. This is yen. This is the dollar down. This is the yen rallying. This is everything that the Japanese want. And also their yields are dropping. Globally, what you are seeing is a repricing. If we are at the top of the mountain and if the bond market has done the dirty work, and as Jay Powell says, the dots have decayed, and that's really trying to take the heat out of the rest of this year. Danny.
Manus, that doesn't mean, though, that yields have peaked. We were just speaking, as you mentioned, with Gordon Shannon from 24 Asset Management, who said, judging by even just the market moves yesterday, you can tell they care more about supply. And that issue hasn't gone away. Well, the majority of respondents from our MLive survey, Manus, yesterday, right after the Fed decision, did agree with the idea that bond yields have not peaked. So let's just take a quick look at that. About 48% or so say that they're going to go up, but not above 5.5%, while Manus, 12.5% think the peak It's above 5.5%.
Yeah, well, that's a heck of a majority. It could be just a short-term lack of digestion at the moment. That supply is still coming, and it's going to be a fountain that just simply is tough to switch off. Danny, let's change gears a little bit because we've got a European company now, one of the most valuable companies in Europe. It is Novo Nordisk, reporting a surge in the sales for the third quarter, driven by, you got it, the hot demand for the blockbuster obesity and diabetes drug. Joining us now is Carsten Munk-Knudsen, CFO of Novo Nordisk. Good to have you with us this morning. 95% of your sales of Wegovy, I understand, come here to the US. You've talked about some of the challenges, the constraints, the supply chain constraints. How would you describe those coming into the US? Are they growing? Are they becoming more acute? Or are we on the verge of something more critical? Good morning. Well done on the numbers.
Good morning, and thank you for having me this morning. And we are out reporting a fantastic set of numbers, growing 33% in the first 9 months. And yes, part of that growth is clearly coming from our obesity franchise, reaching 30 billion and exceeding our strategic aspirations of 25 billion. And the main driver is the U.S., as you're alluding to. And in the U.S., Wegovy is really the growth driver. And we're in a situation where demand is clearly greater than what we're able to supply. So what we're doing in order to run a sustainable business is that we're controlling the intake of new scripts through the supply to the market of the lower doses. And that's something we do dynamically as we're scaling up supply.
Can I just get a read though on how that is changing per Manas's question? Is it starting to get better or starting to get worse? Where do you see it with the supply issue?
So we're continuing to scale supply, and when we go into 2024, you will see a significant step up in Wegovy supply to the U.S.
If we look at, again, the cost of this drug, and Danny and I were looking at some of this, if you're going to go on Ozempic or one of the drugs for a year, it's about $10,000. You still don't have private and public insurers convinced here that they're going to cover you. When will you get coverage? Are you closer to that point in the US? And if you get approval, what is it going to mean for the bottom line?
If we talk specifically to the U.S., then in reality we have around 50 million of patients or people with obesity today who have coverage for Wegovy. So we are actually quite happy with coverage, and the 50 million consists of to the tune of 40 million on commercial insurance and 10 million on different types of public insurance that could be Medicaid, as an example.
So Carsten, I just really want to follow up to make sure we're getting a clear reading on this. When do you think you will get wider approval from regulators? What's your timeline on that? What are you doing to get there?
Well, so right now we are actually, in terms of U.S. coverage, we have good coverage in commercial, and we continue to build that. We're also building in Medicaid. As to Medicare Part D, which is the last main segment in the U.S. market, it's a political process. Of course, we're building a lot of evidence in the benefits of obesity treatment, also vis-a-vis the comorbidities and the SELECT trial.
So Carsten, then on just some of the issues and concerns about some of the side effects. We spoke to the CEO of Novartis last week, and he talked about some of the weight loss drug frenzy, the issue being some of the muscle mass loss. Just take a quick listen to what he had to say.
One of the questions is long-term use. How will patients stay on these medicines? Will they lose muscle mass over time? Will there be impacts on cardiovascular risk because of the impacts on heart rate and other factors? So these are all things I think the next generation of drugs are going to need to address. But I think it's important also from a public health standpoint, diet, exercise, some of the fundamentals can't be lost. Yeah. There's nothing that really comes for free when you think about longevity.
Carsten, I just wonder what you make of that, this concern that kind of, you wouldn't think it, but as you lose weight, your body fat percentage actually goes up because you're losing muscle. How big of a concern is that to you and the folks over at Novo Nordisk?
Of course, patient safety is a starting point for when we develop and commercialize new products. And what we have been studying is of course also quality of weight loss, and that's also going into our research programs. But I would note that with the SELECT trial, which is reporting out at the AHA come 10 days from now, then we have a trial with a patient exposure of between 3 and 5 years, where we're following patients and seeing how it impacts their cardiovascular safety profile, so to say, and the cardiovascular benefits. So I think we're building a lot of evidence of the benefits of treatment of semaglutide in obesity. And by the way, then the SELECT trial, what we're doing there is that we're doing something called SELECT Life, where we're actually going to follow patients for a 10-year period. So we're building a lot of evidence that documents the benefits of treatment of semaglutide.
But we're still very much in the early stages, Carson. We're still very much in the early stages of understanding, using the drug and the repercussions. The biggest risk of all is, of course, that Eli Lilly comes in with Mounjaro. That will have less muscle loss. It will prevent less muscle loss. The risk for you is they steal market share and they scoop in on price. Are you ready to defend market share and preparing a strategy to cut price to defend market share when Eli Lilly comes along?
I'd say the strategic premise for your question, I would reframe, because this is really about driving volume. This is a large market with a large unmet need. The global market is around 800 million people or more with obesity, and today branded prescription drugs are serving 1 million or so. So there's a very, very sizable and very, very long runway. So this is. So
you're not worried about Eli Lilly? You're not worried about them as a competitor? You're not bothered?
We have been competing with Eli Lilly for 100 years in diabetes, and we're happy to do so in obesity also. And given the market size, then there's more than ample of space for two companies to create the market.
Carson, let me ask you about the market size. There's some great research out there from Citrini Research talking about the share of obese adults in the U.S. It has just climbed since the Great Depression, and the potential for that to come in. Give me your predictions 10 years out. Do you think a majority or even a higher amount of American adults who are currently obese will be on these types of weight loss medications?
The short answer is yes. So when we look at the U.S. market today, then we're looking at more than 100 million people with obesity in the U.S., and we see a continued progression and a larger share of that. And as we build evidence in Novo Nordisk, but also across the industry about the benefits of obesity treatments with pharmacotherapy, not only on BMI, but also on all the associated comorbidities, whether it's cardiovascular disease or chronic kidney disease, I'm sure that a much larger percentage compared to today will be on GLP-1 type treatments.
Can we just close off with, obviously, if we look at these products and these drugs, the risk is, I mean, these are for very serious health issues, for obesity, for diabetes, etc. But if we look at where the brand is being taken on reality TV shows, very commonly picked up by people who I know who are not diabetic and who are not obese, the risk is that you have some kind of a serious backlash against these drugs. Are you constantly monitoring that? Are you preparing for some kind of moment of backlash when these products are used by people who are not in the set of people that you're supposed to, as it were, at a health level, target?
Patient safety and appropriate use of our products is our highest priority. So Ozempic is approved and indicated for treatment of type 2 diabetes, and Wegovy is approved for the treatment of obesity in people with a BMI of 30 plus or a BMI of 20 plus with comorbidities. So it's super clear, and that's everything we do on our commercial efforts, and we have significant patient safety monitoring across many channels, and of course very focused on ensuring that our products are being used the right way.
Carson, I'm afraid we're going to have to leave it there. Thank you so much for joining us this morning. Carson Monk-Knosson, CFO of Novo Nordisk, after a blockbuster earnings report. Now, coming up, we're going to dig more into earnings. Strategist Jay Woods of Freedom Capital Markets is going to discuss the earnings scorecard so far and what to expect down the line. This is Bloomberg.
biggest challenges facing the UK government: economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays only on Bloomberg. Context changes everything.
This story did come around as something that's a bit different. There is a dark side to it.
It's hard to even talk to people about these chemicals and tell them, look, there's a chemical that's in you that's not found anywhere in nature.
We've all been used as guinea pigs for the last 70 to 80 years. We weren't told we were being exposed, but they did it anyway.
This right here is the shadow fleet. To actually see clandestine behaviour was really surprising. That makes you think, well, what else is going on?
A lot of people let Agnes down. What she was told is exactly what happened to her.
It took the lid off a much bigger problem. I think that's probably the most shocking part of this whole thing.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights.
How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question.
I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
It's Bloomberg Brief. I'm Menace Crenny in New York with Danny Berger in London. So we're nearly halfway through this earnings season, Danny, and we haven't broken anything yet. The main event, it's today. It's Apple. They're reporting after the U.S. market closed, and a bumpy quarter for big tech, to say the least. Jay Woods is with the chief global strategist at Freedom Capital Markets. Listen, you've sent through some charts. Good to meet you.
Good to meet you.
Let's just step back for a moment. Everybody's obsessed about a 200-day moving average. We're obsessed about this. 3 months of losses in equity markets. But I want your opinion, because for me, it's not a breaking of this market. It's simply a repricing, not an exhaustive exodus. Or have I read it wrong?
No, I think you're spot on. This is a normal correction in a bull market is what we're experiencing. If you look at the major index, and then we'll focus on the S&P 500 before we break down individual stocks, it has a 10% correction on average every 18 months. It has 3-5% corrections every year. We had 3-5% corrections, and now we've sold off 10%. We got to those lines in the sand, as we like to call them, levels of interest, that 200-day moving average, and we breached it for about 6 days, ironically, 6 days below it in March, and we rallied. The key was, let's not stay below it for too long, because bad things happen under the 200-day moving average. That is the barometer of the market, and the barometer was like, all right, are we going higher or lower? We may chop sideways for a little bit. We're in a relief rally right now.
Bad things happen over the under the 200-day moving average, I think, is like my favorite sentence I've heard this year, Jay. It's excellent. It is poetry. Talk to me about Apple. We're going to get earnings today. We've seen some not great reception to big cap tech, except for Microsoft, maybe. What's on the line here?
Well, the line is kind of getting a little narrower when you look at the chart in Apple, and I see you have one up on the screen. Since its last earnings cycle, they actually beat, and the stock gapped lower. And since that point in time, it's been trending lower ever since. Every rally has been met with selling. So it's been a negative 3 months, and now we're starting to see a little bit of a change, a little line in that sand, in that 200-day moving average. We breached it briefly. We got it back above it. Yesterday, we had a nice pop, and where did we fall back to? That declining trend line from the last earnings cycle. So something's going to give here in price action. On average, Apple has about a 4.5% move up or down after earnings. I'd like to see it break back above that downtrend, that intermediate downtrend. And you talk about price action. Microsoft, they had a great quarter, and what did it do after earnings? It gapped higher and it closed on the low, and it retreated. Yesterday, it finally made up for that recent decent loss, and we had a lot of events happening at the end of October that spooked the market. But Microsoft should have acted better, and now it's finally getting back on track. And if Apple, being 7% of the S&P 500, Microsoft, the second biggest, weight in that index, if these two start to go again, then this seasonal November and December end-of-year rally is going to be led on their backs, and I think it's going to happen.
Okay, quick question from the three of us. Who's got a new iPhone 15? Hands up.
Certainly not me.
See?
Certainly not me. I'm working on like 12 or 11 or something.
I think I'm on 13, but therein lies the point. Yeah. Therein lies the point. I'm waiting for a deal from Verizon. Let's move along. Disney, a whole new world. They're getting their hands on Hulu. I know you don't want to talk dirty fundamentals, but they are.
We can talk. Yeah, I mean, they've got a lot going on. Iger's back. He's trying to, turn the ship around. He's got a lot more work than he anticipated. But when I look at Disney and I look at the price, when in doubt, we have an expression in technical analysis, when in doubt, back it out. So I look at this chart on a longer-term basis, because if you look the last 2 years, it's been a disaster. It was one of the worst stocks in the Dow last year. It's down again year-to-date, and it's struggling at this $80 price point. But it's starting
Maybe the Hulu deal will help
Maybe
them.
It will be the Hulu deal. They have earnings next week. Maybe they finally do something with ABC and the streaming at ESPN. So there is a fundamental story that's going to drive the price action, and right now we're kind of in that balance. So what I like to look at, risk-reward setups. And if you're going to enter Disney and you haven't been in it, all right, from a risk management point of view, you get in at this level. If it breaks below, get out, take your little loss, and move on. But the reversal that it could have is tremendous. And then if you look at that long-term chart, the 200-week moving average, this is the biggest percentage it's been below it in the last decade. So just a mean reversion is good for a 10 to 15% rally.
This is what I will say is Manus, I can buy whatever iPhone I want, but I can't get Hulu. This is one of the benefits of you living in the U.S. and me not being there yet.
Listen, I'm grappling with a smart TV. One's going out the door today and one's coming in tomorrow. So it's like, Hulu is the least of my worries at the moment. I can assure you of that.
Give the man good old-fashioned cable. That's all he needs. Hey, Jay. Thank you so much for joining us. We really appreciate your time early this morning. Jay Woods there of Freedom Capital Markets. Thank you so much, Manus.
Danny, well, if we haven't had enough of Hulu, Comcast, Microsoft, and Apple, there are other market-moving events. We'll probably reflect on some of those. Here's a quick check on the markets. Relief from the Fed, intimating that they may have come very far and done a lot of the hard work. The bond market's done that. Spoos are up 0.5%. The dollar drops down. The dollar, of course, according to Mr. Englander over at Standard Charter, is vulnerable. But then, of course, what happens in the economy next year can define that. Treasury yields will take another pop of 5%, according to Gordon Shannon on this show this morning. Good morning from New York and London.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're going to ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
Welcome back to Bloomberg Brief. I'm Danny Berger in London alongside Manish Cranny in New York. Let's get you set up for your trading day. Here's a look at what's ahead. The main event is the BOE rate decision. It comes at 8 a.m. Eastern. That will be followed by Governor Bailey's news conference at 8:30 p.m. Then at 8:30 then we're going to be getting U.S. initial jobless claims. Those will also hit at 8:30 a.m., not p.m. I'm getting my hours mixed up. Durable goods and factory orders, those will hit at 10 a.m. And then finally, some big earnings today, Manis. We got Apple, Starbucks, Hyatt, hotels, Conoco, Phillips, all on deck. I can say, I don't know what's wrong with my brain this morning, but I can say I know Apple is after the bell. I'm very sure of that.
I just want everybody to know that there was a frenzy of emails from Danny Berger that came through this morning on the Bloomberg. It was like, what? You were on fire from the moment you got on the tube.
So many good stories today.
Yeah, I know. Actually, I was very grateful. I got to say to everybody, she sends in the material. She's on the tube way ahead of me. So big shout out to Danny. Qualcomm.
Thank you, Manis.
You're very welcome, Danny. It's a two-way street here. Qualcomm, the one line that I saw that I really liked from is that inventory, excess inventory, has now been cleared. And they expect revenue from China to jump 35% on Qualcomm.
I also feel like this finally eases some of those concerns around the chip makers and AI because this earnings season has been so spotty. Does what we hear from Qualcomm mean, hey, maybe some of the slump is finally easing? Maybe we can get cheery about AI once again.
Yeah, but I want to get cheery about anything. It's a bit when I rang the pension advisor, I said, I don't think we have any Tesla. He said, you have an entire exposure to Tesla. Stop worrying. Let's have a look at the bond market.
If you're in the S&P, you're in Tesla.
Well, it's in some ESG fund, apparently. Right, okay, that was a shock to me. Here's the bond market. We're losing it this morning, Danny. You're looking at gilts. You've got gilts actually coming down more than the bond market because it is BOE. Do you believe the Bank of England will no longer have to cut rates, Danny Berger? No longer have to hike rates.
Idea.
Hike rates.
I mean, what? Maybe it's a cut next. Who's the first to cut? Is it BOE? Is it ECB? Is it Fed? Maybe we're not in a place yet to debate that. Anyway, that's it for us. Surveillance is up next. This is Bloomberg.
Been so used to the fact that every time there's a problem, central banks come and ease. this has been the kind of playbook, throughout my career, before that, after I left. Now we're in a very different environment. Central banks actually have to create a recession, in essence, to get back to price stability. So it's a complete reversal of the modus operandi, in a sense, of central banks as they've known it for the last several decades. So that's why it's not so much that they're getting something wrong. They've now acknowledged that there is this trade-off, these costs to pay, but it's a completely different way of thinking about central banks, and it's a different role. Another way to put it is they have to be unpopular now in order to get inflation back down, where it used to be you could count on them each time to rescue you, to stabilize the system, to bring support. And that has shifted. And I think many people, even in the markets, have not quite understood, in my mind, how much we are now in a different regime compared to the last 4 decades, effectively.
So it's what, almost an easing bias in the markets? How would you describe it?
In the U.S., yes. And I think it's this idea, this almost pre-programmed idea, when there is a problem, i.e. potential recession, central banks will come and ease.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
Meeting by meeting, we're asking ourselves whether we've achieved a stance of policy that is sufficiently restrictive.
Clearly what the market saw was a preference for the worry of tightening financial conditions. We're at sufficiently restrictive. We could be done.
If I were recommending or talking to Jay Powell, I would recommend that he leave the door open.
Our concern is sort of around May and June, where is the Fed going to be?
It's unlikely that 1 quarter point move is going to be sufficient to do the job. So I think it's either 0 or multiple rate hikes.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Bloomberg Surveillance the morning after the Fed meeting, the morning before the jobs report. Lots going on this week. Luke Howe is going to start us off strong in a moment. Jonathan Farrow still on assignment. Bramo, finally a day off for the Bramo. She's recovering from Halloween, the offspring. Joining us now by special invitation. I'm going to tear up here. It's just been weeks. Joining us this morning, Scarlett Fu. She hasn't been up this early in, I think, like 6 years. The star of afternoon TV. How'd that 4 a.m. feel?
Ask me in 2 hours.
Yes, in 2 hours. Scarlett Fu with us today as we consider the earnings season, a little bit out here on Thursday, but really we've got to consider what you witnessed yesterday, which is without question a melt up in the market. It continues this morning. We'll get to that in a moment. You know, I looked, Scarlett, at all that came out yesterday, and there was a little bit of a nuance early in the Powell Love Fest, where he said it's not solid. He changed the language and said it's strong. And the shift from a solid economy to a strong economy really belies the worry economists have about a slowdown in this present quarter.
Yeah, and that's something that's looming over the Federal Reserve as they move forward. What I also learned from Powell is we have this new definition called lumpy. Did you know progress in inflation will be lumpy?
It's lumpy.
Yeah. What does that mean? What does that look like?
Well, we're going to dive into that. We got some nice compare and contrast for you, particularly over a bag of groceries. We'll get to that in a moment. Let me do the data check right now and just dive into that, because it's really quite something. We continue to lift this morning. Futures up 21, up a solid 0.5%. Put a bow on that near 4,300. A Dow up 100 points. But the NASDAQ is a story. Tech on Apple this afternoon, a huge report from the people of Cupertino, up 0.7% on the NASDAQ 100. BitDog over 35,000. Catherine Greifeld said, Tom, you have to quote BitDog moving that fast. 4.95% on the 2-year. We're in on the 10-year yield. I look at the screen and I can hardly understand the numbers. We've moved so much in 48 hours. 30-year bond well under 5%, 4.90. percent. A little bit of disinversion here. Thank you, Priya Misra, for joining yesterday. And the real yield to me, Scarlett, is the heart of the matter. We went from that 250, OMG, the world's coming to an end, and it comes down to 2.30%. That's a demonstrative move in the inflation-adjusted yield.
I can't keep track of the moves in the 10-year yield. I mean, we were at 5% last week, and we had this massive 17 basis point move yesterday. If the bond market is doing some of the Fed's work for it, what does it mean when we go up and go down so quickly? Can you rely on this market to do any work?
I don't think you can rely on the market. What I looked at yesterday, and this is a fancy pro study, but this is not the first, the second, the third, the fourth, the fifth time we've had a, wow, it's all over, it's done, which is the phrase the economists are using this morning. The rate rises are done, the inflation's done. This is 5 times we've been through this exercise. Will it stick this time? And to me, that's the heart of the matter into the jobs report tomorrow.
Into the jobs report tomorrow, which again will likely show that the labor market is robust. We also get the Bank of England later this morning in about 2 hours. Have you heard of the term Table Mountain?
No, I don't know that Table Mountain stuff. That Ellen Ruskin knows that, you know.
Well, it's apparently another way of saying terminal rate. Rates have peaked, but I mean, I would just say plateau, but
that's where we are with the Bank of England. We're going to dive into that. I saw Governor Bailey in Marrakesh at the IMF meetings. He was not declaring victory, but certainly a different calculus there, and certainly a different calculus in Germany and all of Europe, where you've got some real economic slowdown. Before we get to Luke Coward, we've got to talk about this, Scarlett. I have never seen a predictive deceleration in the American economy like what's predicted right now. Morgan Stanley, Seth Carpenter stopped the show yesterday to go from 4.x% boom economy down to Ellen Zentner, under 1%, 0.9% economic growth for this present Q4.
It's grinding to a halt.
It's grinding to a halt. There's some inventory numbers in there and that, but I really wonder how many of our viewers and listeners really understand how they're modeling a slowdown right now. To me, it's extraordinary.
I think if you ask the average consumer, they didn't actually feel like the economy grew that much in the third quarter. Their sense of their confidence and their sense of the growth was definitely a lot more, let's just call it restrained. And I think going forward, maybe in the fourth quarter, if we're looking at sub 1%, it's not going to be that, people are not going to feel that bad, but the numbers show a dramatic deceleration.
To make Luke Kawa feel good. I mean, Luke Kawa is hockey royalty from back a ways, collegiate hockey at royalty. And the fam, we got to get a sports update from Fu. We used to do this all the time when we were together day after day. Rangers start strong.
They start very strong. And we're not talking
Texas
Rangers.
Rangers.
I know, I was just saying the New York Rangers. It's early, but they're first in their division, so yay. And they have a 5-game winning streak.
How does Lundqvist look?
Lundqvist was playing in a charity game, or he's supposed to play in a charity game. I follow him on Instagram.
Okay, there's your hockey talk for the morning with Scarlett Fu. We're thrilled she's with us here through the 3 hours. Again, futures up 21. With UBS Asset Management, Luke Kawa joins us now, asset allocation strategist. Do you have to asset allocate, Luke, off what you witnessed yesterday from Chairman Powell? Do you have to change the script?
Well, for us, we tend to take a little bit of a more medium-term view in terms of tactical asset allocation decisions. However, there are some things that do stick out as, warranting remembering as we move forward through the year. And I think, not to secure my next invite, but Powell's answer to Mike McKee, I think, was pretty telling in this. And Mike was asking about the question is, do we need below trend growth? Do we just need slowing growth? And then, the Fed chair, I think, came out with an explanation that helps backfill the amazing moves we've seen this year, which is, largely, I would say, U.S. growth consistently surprising to the upside and inflation coming in, right around where they're expecting. And, the way Powell squared that circle was to say, hey, maybe potential growth is actually just temporarily a lot higher than we thought. He could have answered that a very different way. He could have said that, in fact, some of the unwinding we've gotten on inflation is very temporary, and because of the real growth outlook, we're still concerned. What I took from this is that the Fed's outlook, the Fed's call on real GDP growth, the strike price on that is a lot higher than I would have previously thought heading into this meeting. That's a good news story for the expansion.
Luke, what I saw yesterday was a lot of activity before the Fed meeting. Very, very unusual. Just on the Bloomberg terminal, lots of red, green, blinking, pulsing, if you will, before 200. Was yesterday one big short squeeze, whether it's bonds or it's equities? Was it one big cover?
Well, I think that's certainly a possibility, and to set the stage, the context of where we were heading into this meeting, since the inception of the MSCI ACWI and the Bloomberg U.S. Treasury Bond Index, this is the first time since at least 1987 we've gone 3 straight months with both of those falling. So a very bad 3-month stretch for financial assets. So when you get the Fed saying, effectively that hey, we might be done, the bar to hiking just through real growth surprising to the upside is a little higher probably than you otherwise would have thought. And we're acknowledging, as Scarlett noted earlier, that there's going to be some bumpiness on the path to getting inflation lower. And I think that's pretty much alluding to 6-month annualized core inflation probably going to pick up a little as we head into year end, and 6-month PCE on the core side probably going to flatten out a little. I think all that provides a bit of good fodder for maybe perhaps getting some relief in risk assets. Certainly help that some of the non-economic factors that were propelling treasury yields higher, we got some news effectively saying that those might not be as bad as we thought, at least in the coming quarters.
So, Luke, I'm curious to get your take, given what we've seen in the earnings reports so far. The numbers, by and large, are pretty decent, but anyone that doesn't live up to the highest estimates in terms of the forecast gets punished pretty quickly. By first half 2023 standards, the Magnificent Seven earnings seem to have disappointed. What would you say by regular standards if we didn't have this big run-up at the start of the year?
I would say we saw a big kind of change in timbre in terms of how the market was expecting this quarter of earnings versus the 2 prior. Q1, Q2, you were seeing pretty large negative revisions coming into season, which does make it a lot easier to surprise to the upside. You didn't see that as much in Q3. The bar was higher. Results were still solid, but I think what we're seeing that's kind of most concerning, and this comes through in anecdata through the beige book, and it also comes in more qualitatively and quantitatively through the guidance we're getting from companies. Right now, what's happening is that Q4 estimates, for the point in time we were at in the year, have seen a pretty negative revision as we move from Q3 to Q4, and I think that mirrors something that Tom was talking about in the opening. This is a very expected deceleration in growth. It's been highlighted by economists. It's now been highlighted by corporate America. And, our view is effectively that just the real income growth you're getting is going to be sufficient to keep earnings growing. And that, estimates, last I checked on the Bloomberg terminal at about 0.8% for Q4 growth, that's still low in the context of how strong the handoff seems to be from September and October. And the most persistent, dominant element of this year is the U.S. data surprises on the hard data side, just so consistently to the upside.
So how does that set us up for the kind of forecast that Apple is likely to hint at when it announces results later today? I mean, people look at it as this proxy for China growth, for China demand, for U.S. discretionary spending, certainly for high-end items, and also the shift of the global supply chain away from China.
Yeah, certainly going to be a big event in terms of commenting on single names, not something we tend to do even in a name as big as Apple. So I'll duck that one if you don't mind, Scarlett.
Duck away, Luke. When you look at overall conditions right now, how oversold are we? Because with the NASDAQ 100 and the S&P 500 in correction mode yesterday or last week, certainly not yesterday because of the big rebound, it's making stocks more prone to relief rallies. Is this just another leg of the relief rally we're seeing right now?
So we do expect heading into year end, as you phrase the question, as stocks or bonds. Over the medium term, we think both probably fairly good, considering expected returns have improved a lot, particularly in bond world. But more tactically, we do think that the outlook is for equities to be rallying into year end. I would say based on some of the guidance we've received recently from corporates, maybe tempering our expectations for how much of a Q4 rally you get. But our view is that the earnings story, a calming in bond volatility, the seasonality, and to your point, the extent of how oversold we got are factors that are going to help. Looking under the hood, we did see a lot of components that are trading below 50-day moving averages, et cetera, et cetera. We pretty much got to levels consistent with a lot of decent market bottoms before.
Luke, thanks for the brief. Luke Kawa with us with UBS Asset Management. Yesterday there was one headline, 40, 50, 60 headlines came out, and there's one headline that stuck out like a sore thumb, where the chairman's talking in the statement about cumulative inflation. Scarlett, I take real issue with this. The suits and ties talk about monthly, month over month, year over year in that. That's not where we're living. Cumulative inflation. On radio, let me explain this to you. This is USDA. How much do groceries cost? 1 year they're up 3.5%, way over a 2% normal. The next year they're up 3.5%. And in 2022, they ballooned up 11%. And that's a cumulative, almost compounded in aisle 14 at your store. Groceries have gone up 19%. And the two Americas here, the fancy America that we're talking to every day, is talking all these fancy statistics. And what people are living is not from the beginning of the pandemic, but somewhere deep in the middle of the pandemic.
Exactly.
Groceries are up 19%.
You can't go to
That's the agony.
Costco without accumulating a bill of about $400, $500. And that's what gets people discouraged, disgruntled. It doesn't matter that inflation is coming closer to that 2% target if your Costco bill is about $500.
What is the number one thing at Costco where you go, wow? To me, it's beef. I look at beef and I just start laughing.
Just the Halloween candy. It was $20, $30.
Oh, really?
Yeah.
Okay, thank you. You stocked up at Costco on the Kit Kats? You know.
Unfortunately, yes. Now we have a lot to work through.
This is something, folks. This cumulative phrase from Lyle Brainerd is maybe the most important phrase of the last 24 months. It's cumulative inflation, something we're all living. Futures up 19, Dow futures up 84. The VIX stunning. We'll talk about the VIX here in a minute. Scarlet Fu, she's so large, she's in for both. John Farrow and Lisa Bramowitz. It's a miracle. Stay with us. Bloomberg Surveillance.
UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Last month's jobs report caught everyone off guard.
Major upside surprise on the headline number.
Considerably stronger than people thought.
Almost twice as much as what the expectation was.
This Friday, Tom, Jonathan, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
Rates are going to have to stay higher for longer, potentially even go higher.
Can there be lasting damage here?
Those cracks are starting to form.
The October jobs report, Friday on Bloomberg Television and Radio.
We're continuing working to significantly step up the flow of critical humanitarian assistance into Gaza. The number of trucks entering Gaza continues to increase significantly, but we still have a long way to go. Israel has the right to responsibility to defend its citizens from terror, and it needs to do so in a manner that is consistent with international and humanitarian law that prioritizes protection of citizens.
The President of the United States managing the message yesterday here as the images from Israel, from Gaza continue, and of course the other areas of Israel, the West Bank and the northern border with Lebanon. Interesting to see. We're going to dive into that right now. Greg Vallier to join us here in a moment. Let me do a data check. Jonathan Farrow, Lisa Bramwith, they're both off today. Scarlet Fu, we are thrilled that Scarlet Fu's people would release her for the afternoon to come do this in the morning as well. We have a continued equity lift off of the joy we saw yesterday in the Powell press conference. Extraordinary move from 200 yesterday. The report in summary for those keeping scores, the Fed is done. At least that's the belief. Futures up 20, Dow futures up 94. The VIX, we'll go to this, the 21 level into 16.47 on the VIX. In the yield market, yields continue to come in. That's important. The 10-year yield, 4.72%. The 30-year bond, you recall, was at 5%. It's in a solid 10 basis points, make it 4.91%. Oil does not play today. The dollar churns, fractionally weaker. And yes, I am on the Japanese yen watch. Really not much news there in the last 48 hours, but something we're watching as well. Right now, we're going to go to Tel Aviv. Oliver Crook with us, as you heard the president managing the message as well. Oliver, how is the government of Netanyahu, how are they managing the message in Tel Aviv in the last 24 hours?
So you heard from Netanyahu this week, and again, the message was very, very clear, which is one against any kind of ceasefire and really on the defensive, Tom, and Netanyahu defending himself, as we've talked about politically internally, but also against the accusations from the rest of the world. And I think it's something that we need to bear in mind, that is the further that you get from October the 7th date, the attention, the balance of attention is going more and more into what's happening today in Gaza. And as that time elapses, as we hear from the authorities in Gaza, that's 8,800 people that are dead, according to them, 2/3 of which are women and children. So the United States, and standing behind this government, is going to have to address that. And as Blinken comes in, you know, Tom, we put it in the context. Blinken, what has changed since he came last time? He will be in Tel Aviv. Yes, he will also be in Jordan. Jordan has called back its ambassador to Israel. Significant. Jordan, one of the first countries to make peace with Israel back in the 1990s. But again, taking issue with what is going on in Gaza and the renewed calls by the king and others that saying that the West and its attitude is indicating that Palestinian lives matter less than the Israeli lives.
So to follow on that, with Antony Blinken visiting the Middle East again, visiting Israel, visiting Jordan, what is his objective here? If things haven't changed all that much, what would count as a victory in this next trip?
I think that what will be interesting is, of course, I think that from the Israeli side of the trip, you're going to expect some of the same things that we've gotten throughout, which is the sort of full-throated support. Maybe there's a bit of the tacit sort of suggestions about how they conduct themselves, how this military operation is undertaken. But I think the more interesting part will be the side in Jordan. Where is the United States? How is Jordan viewing their role in this? And also, will he go to other countries within the Middle East? If you recall, last time he was here, he went to the UAE, Saudi Arabia, Egypt, Qatar, all of these places. Is he going to expand that? And as well, the Saudis, an interesting question there. When you have more and more activity from Yemen with cruise missiles going over Saudi airspace, as we understand it, I think that that part of the trip is going to be critically important to watch, and any comments from those nations.
Oliver Crook, thank you so much. In Tel Aviv with our team led by Ethan Bronner as we continue to look at the war in Israel, Gaza, and other points. Joining us now on the other points in the wars of Washington, Gregory Vallier. He's Chief U.S. Policy Strategist at AGF Investments. Greg, I believe it is November. That's 12 months away from an election. Take the drama of October and our many wars and fold it into how things change 12 months before an election. How does your world change given the pending one-year-out election?
Well, good morning, Tom. There are so many unknowns. I'd say one big one is Benjamin Netanyahu. If you saw the extraordinary story in the New York Times on Monday talking about how Israel and Netanyahu were blindsided by Hamas, they got totally caught off guard. There's going to be recriminations. I think that has to be looked at very carefully. There's that, there's the Fed, and there's this continuing fight in the House between fairly moderate Republicans and the right wing. That fight is about to resume within days.
Right, but you've got a right-wing Speaker of the House now. Shouldn't that restore some order in the House?
One would think, Scarlett, wouldn't one? But I'm not quite sure about that. I think that even a handful, 4 or 5 House Republicans could block this next spending bill. And there are Republicans in the House who don't want to spend money on Ukraine, as you guys know. And there's some lukewarm attitudes toward Israel. But the big fight still is a budget. We have a budget deadline in about 2 weeks, and they're not close to being done.
Yeah, and so we're watching that November 17th deadline very carefully. I want to get your take also on what the economy means for the presidential election. Try as it might, the White House has been selling Bidenomics, but it's not doing very well when consumers are feeling pretty sour. What does the current Fed policy mean for the economy in 2024?
Well, I think there's maybe some relief among consumers that the Fed didn't raise rates, but I thought you and Tom a few minutes ago hit it perfectly talking about food prices. I mean, food prices are up, what did you guys say, 19%?
Cumulative, yeah.
Over 3 years.
Over 3 years. But that leaves an awful lot of people, maybe not us, but it leaves an awful lot of people discouraged that this is not improving.
Yeah, what's important there, Scarlett, is the USDA, this is really good data from the U.S. Department of Agriculture. They say that for the have-nots of America, it's not third world, but 30% of their compensation is going to food.
Which
right
means
now,
30% of their compensation is not going to discretionary spending or anything else that usually supports the economy. Greg, I want to bring it back once again to Fed policy and the economy in 2024, because Jay Powell's term expires as Fed chair in early 2026. So whoever wins the 2024 election would get to pick the next Fed chair. What does that mean to you? And I bring this up because if Donald Trump wins the nomination, yes, he nominated Powell as Fed chair, but he also nominated Judy Shelton as a Fed governor.
Yeah, I think if Biden wins, obviously he'll try to keep Jerome Powell. If Trump wins, he will get rid of Powell as quickly as possible, and that will, I think, cause some anxiety for the markets. You know, one other quick point I would make about what we could see in the next year or so that maybe is outside of the box. I wrote a piece this morning on Robert F. Kennedy Jr. There's a new poll out overnight from Quinnipiac showing him at 22%. That I was surprised. I think a lot of people were surprised to see that. And I do think that he will take away from Joe Biden, young people, independents, African Americans, environmentalists. Robert F. Kennedy Jr. is not going to be the next president, but he may determine who will be.
Greg Valliere, thank you so much. With AGF Investments, writing every day, really a must-read piece. Look for that from AGF Investments of Toronto. I want to look at the equity markets right now. The SPX up 21 points, 0.5% move. That's a large move. And we look at it through the VIX, the volatility index of the Standard & Poor's 500. A higher number is fear. The joy, the nirvana, Fu sold everything at a VIX of 12.82. We go out not to angst, not to a 30 number, which is real crisis, Scarlett, but we go out to 21.71. And just like that, accelerated by what we saw yesterday afternoon and this morning, we're back to a VIX of 16.47.
Yeah, below 16.5. The average over the last 5 years is 21.3. Can we still rely on the VIX as a reliable indicator?
That's a loaded statement. There's some sophisticated ways to look at. Mark Crudmore's excellent at this. I mean, I like my eyes.
Check him out on the MLive blog on the Bloomberg terminal.
All I know is we're at 16. It's back. It's a bull market, I think, or something.
Yeah,
like
a week
that.
after a correction, sure.
Apple this afternoon.
for the first, call it 18 years of Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right? And
Yes.
making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on and folks are so excited about it. Climate tech is the hottest area to be in.
Bloomberg Surveillance. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Mr. Farrow and Ms. Abramowitz, they are off. And today, well-deserved sojourns as well. I demanded the attendance. Double tour of duty today. One Scarlett Fu. She'll be with Catherine Greifeld this afternoon for those important Apple earnings. Let's take a quick look at that right now. Thank you so much for joining us this morning, Scarlett. I don't think it's a small matter. Apple matters to the American psyche.
Oh,
There's
absolutely.
no other way to put it.
I mean, people are lining up to pay thousands of dollars for a phone. I say thousands because when you add in the tax, it's about $1,200, $1,300. And the problem for Apple is that Chinese consumers aren't necessarily doing that.
Yeah, it's a mystery. Our Mark Gurman, with real leadership coverage on this for Bloomberg News, makes real clear this time around, China is the mystery.
They're all excited about the Huawei phone.
We'll see. We'll have good coverage on that this afternoon with a lineup of guests through the day. On the market, futures up 20, Dow futures up 90, VIX solid. That's what the new phrase, strong, not solid, strong VIX, 16.49, really coming in from a 21 level as well. Yields, they continue to come in 2 basis points in the 10-year yield. I'm going to go to Brent crude right now, the global price, $85. We did not get to a 79 print on West Texas yesterday. I'll have to double check that, but I believe I don't have much of a story in currency today. Bank of England, we'll get to Sarah Hugh in a moment, 121.90. On sterling. Under surveillance this morning, President Biden urging Israel and Hamas to pause fighting in order to free hostages. The president stopping short of supporting a full ceasefire. This is Hamas says 600 more foreigners and dual nationals may leave Gaza today. It evolves with Oliver Crook's tone there. To me, is literally evolving, not even day by day, half day by half day.
Hour by hour. And of course, there's increasing criticism of Israel's operations in Gaza. You've got more countries withdrawing, recalling their ambassadors. Oliver mentioned Jordan, Japan as well, some Latin American countries. It feels like the U.S., in standing unequivocally behind Israel, is feeling a little bit more lonely in doing so.
Hussein and rather Abdullah in Jordan is a hugely symbolic pull away to have their embassy go back. This is, of course, right adjacent on the Eastern Front to the West Bank. And this goes back to the 90s. This is Bill Clinton and
Clinton era.
That year as well.
We'll see what Antony Blinken says when he does go to the Middle East once again, his go-round trip again.
Go-around trip again. Mike McKee, late in the press conference yesterday, noticed that the Fed leaving rates unchanged. Not a surprise here. Chairman Powell hinting that the central bank may be done hiking. And, we'll have to see. Now, the focus this morning goes to the Bank of England, Governor Bailey and it's a completely different story over there. John's been really articulate about this, but Scarlett, their inflation is different than our inflation. There's no other way to put it. I don't know if no, I don't think so. I think that's exactly right. We have a lumpy inflation affecting some of American society. The fancy people, maybe not all that much, but in England, it's much more pervasive. And I would again go to our odd housing market with 8-point X mortgage rates, completely different than their floating rate debt market.
Well, nobody
where it
else in the
shifts
world
and
has
moves
these
right
fixed
away.
rate mortgages for 3 decades like we do in the U.S. with the
Yeah.
government buying up a lot of those mortgages. So yeah, it's a completely different story. When it comes to the BOE, they're allowed to dissent. Did you know that? They don't have to vote unanimously.
Yeah, well, I'm glad they do. And again, holding court there, Catherine Mann, of course, of Brandeis and Citigroup over there with Megan as well. Right now, and this is important, and this is perfect to have Scarlett Fu here because she is a surveillance celebrity lodestone.
I watch a lot of
Fortress
TV.
Iger, they're going to buy the rest of Hulu. I don't think that's a surprise, but I thought $8 gajillion was a lot. Scarlett, negotiations expected to last months, but Disney expected the deal to be completed. What's so what on this? Why do I care that Disney will take out Hulu?
Well, Disney already owns 2/3 of Hulu. Comcast owns the remaining 1/3. And as part of the acquisition of the Fox assets, they had agreed that one or the other would make an offer for Hulu. So Iger is now looking to resolve Hulu, but he also has to sort out a whole bunch of other issues, right? ESPN, partnership, maybe investment, linear TV in the U.S. Is he going to sell that? That's what he hinted at. Operations in India. He's also got to fend off Nelson Peltz. So he's got a full to-do list.
But to me, the basic idea here is with Netflix dominant, is the basic idea, do you merge Hulu with Disney Plus? Do you merge the kids channel and Star Wars?
You mean bundle it?
Bundle it. Or no, I don't mean bundle it. I mean merge it right
it.
into one platform.
I don't know. Hulu doesn't have the brand recognition that Disney Plus does.
Yeah,
Do you watch Hulu, Tom?
I don't watch any of it, and what I notice at home is mostly what people are watching is YouTube. We say good morning. Bloomberg surveillance on YouTube Live, that's a good and beautiful thing. That's what they're watching.
Nice segue.
Well, I do that. We're shameless promoters, unlike the close.
You should watch The Bear on Hulu.
What's it called?
The Bear.
The Bear.
Yeah.
I don't know The Bear.
Well, you like Taylor Swift, and there's a good Taylor Swift reference in The Bear in season 2.
Okay.
Yeah.
We'll get a Taylor Swift brief from our celebrity lodestone here in a moment. Right now, we have a needed brief here on the Bank of England with their announcement today. Sarah Hewen joins us, head of Europe and America's research, Standard Chartered Bank. Do you expect a surprise from the Bank of England, or is it supposed to be a snooze fest like the Fed was not yesterday?
Well, it is supposed to be a snooze fest, so it certainly would be a surprise if we do get a rate hike. And I mean, that's the risk. We could still see another split vote, perhaps hopefully not as close as it was last time around, but we may see 3 policy committee members still voting for another 25 basis point hike. Last time around, if you remember, they were still concerned about inflation pressures. And we've still got inflation, 3-4 times higher than the target. Now, we know that it's going to be coming down over the course of the next few months, particularly October's inflation will be a step lower because of the energy price impact. But there are still concerns about what's happening to wage growth, and could that ultimately be inflationary?
You do what first-class economists like yourself do. You look at base effects. You go 12 months on, folks, and when you go to the 13th month, you forget the agony of the month 13 months ago, and we have base effects. The people watching this in England, in the United Kingdom, Sarah, are not worried about base effects. They're just looking at a gigantic move in energy inflation, food inflation, and that. What is the pain of inflation in the United Kingdom right now?
Yeah, it is clearly very painful. There's a big cost of living crisis, and that's being exacerbated by higher mortgage rates. So increasingly, people either on floating rates or people who have fixed rates mortgages that are having to refinance, and those refinancings are coming up with each month that goes by, then that is a big burden on many households. Of course, you have a split. For some households that don't have mortgages, that have high savings, are seeing, let the good times roll because interest rates are high, they're getting high returns on their savings, and they don't have the burden of mortgages. So there is a split in the UK, but certainly we're seeing increasingly the impact of higher interest rates starting to weigh on growth. Growth expected to be 0 for the third quarter, and that's a big contrast really with what we've seen in the US, where third quarter growth was so strong.
Absolutely. We talk about, or we joke about this BOE meeting being a bit of a snooze fest. The last BOE meeting in September, the decision was anything but, because the decision to hold surprised a lot of people. And it also, to Bloomberg Intelligence's point indicates increased tolerance for upside data surprise. What is the extent of that tolerance, Sarah?
There is some tolerance. The Bank of England's forecasts are for very weak growth and for a big fall in inflation. So I think that there is a view that there are, fundamental effects that will bring inflation lower. But as we had such a close vote last time around, then any persistent upside surprises on either activity, particularly on wage growth and on inflation, will be a warning shot for another hike in rates. Can I just say as well that the labour market data are very unsatisfactory, and so the Bank of England is hobbled by not really knowing what's going on with jobs, with wages. The official data aren't really telling the true picture. And so there's a bit of guesswork that's needed to be done on that.
So the guesswork extends to the terminal rate as well. The BOE's chief economist has described rates at a table mountain. Tom had never heard of that term. You had brought up to us that people have used the word Matterhorn to describe where rates stand. Give us some context here on what table mountain means and where the BOE is headed when it comes to terminal rate.
Yes, I mean, this was Hugh Pill really describing his own view that Bank of England rates would need to stay at current levels or higher, but staying high for long. That's the mantra. So having reached a peak, that peak stays, a level for quite some time. The Matterhorn idea, actually, that's what we've seen in other economies. For example, in Brazil, where you saw a huge and rapid increase in rates, and then an equally rapid reversal in rates. The main theme here from Hugh Pill and from others in the Monetary Policy Committee is don't expect rate cuts anytime soon.
Sarah, what is Standard Charter? You've got the huge advantage of Stephen Englander working with you. What do you see on euro, sterling, or on cable?
Yeah, good question. I mean, we see dollar staying strong really against sterling and against euro as long as the US economy appears to be outperforming. I mean, there's such a big difference here between what we're seeing in Europe and UK on the activity front versus the data that are coming out of the US. Now, we expect that to change. We're looking for US to grow below trend over the course of the next 12 months. Expectations of Fed rate cuts starting to be factored in. We think that they'll start in the third quarter, and that as those expectations start to feature, that will weigh on the dollar.
Sarah, thank you so much. Sarah Hewen, Standard Charter, and of course we look for the Bank of England here this morning. I'm going to call it. Help me here, Chris. Is it 20 minutes we're going to see Bank of England, or is it 7:15? I can't keep score on this stuff. 8 o'clock. Okay, it's daylight saving times or whatever. It's like out there.
Yeah, usually it's 7.
1 hour. It's usually 7. Did I get that right?
No, you're right.
I didn't screw up. Of course, part of the problem we have is Pharaoh would never do this. I mean, Pharaoh and I were talking, what Newcastle did yesterday in football to Man U and all that. Can't talk about that now. We got to go to the celebrity lows on Scarlet Fu. In a few days, she will be at Madison Square Garden for the reopening post-pandemic of the American concert. How about this? Rockstar seats for Fu for Pink.
Yeah,
$4,500
I'm not sitting in these Rockstar seats. This is Section A, row 16 that you're quoting here, $4,516. That's not where I'm sitting.
I mean, this is a follow-on from Taylor Swift and Beyonce, and, tell us about this. I mean, it's like entertainment is back.
It is back in a big way, and Live Nation's going to be reporting earnings later today as well, so we'll really see the extent to which people are shelling out for tickets. And if they're not, they're going to go see the Taylor Swift movie through AMC.
You wonder if there's a Pink movie. I mean, let's be clear. Scarlet Fu misunderstood. I mean, I get that from like 2 albums ago or 4 albums ago with Pink, but the whole Swift thing and the Beyonce thing is redounding across the whole industry.
Yeah,
is what I see.
Well, I mean, it's a way for artists to make sure that they monetize off their music as opposed to having the streamers take all of it, Spotify and everything else, and they get pennies or crumbs from that revenue.
So my math here is 2 people. Section A is $9,000. What does that make Taylor Swift's tickets?
Oh, it's just astronomical.
It's astronomical. I mean, it's ginormous.
Did anyone in your household ask for Taylor Swift
Look,
tickets?
the last concert I went to was Three Dog Night, so leave me alone.
Wow.
That was, a few ways ago. We're going to have a lot more on this. Of course, Paul Sweeney helping out here with the entertainment world. And you mentioned this earlier, Scarlett. I mean, really one of the great stories of 2023 is the absolute collapse of Disney. I mean, that's a blue chip stock. Did you know that?
It is a blue chip stock.
You give it to your grandchildren.
Bob Iger came back, and it's a very different Disney than the one he left. I mean, he left at the top. He thought, this is it. I've set up everything for my successor, and now he's coming back and cleaning up a lot of the issues that were, frankly, there when he was CEO the first time around.
I have coverage on that, and of course on entertainment, Apple involved as well. Look for our Apple coverage to close this afternoon. Scarlet Fu, Catherine Greifeld, they will go beneath the headline data from Cupertino as well. Much needed. The banks beleaguered. Gerard Cassidy, RBC, maybe our interview of the day. This is Bloomberg Surveillance.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. And it's then the market forces and the business incentives of global companies that transform that EU rule.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
But are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
City, from London, in Sydney, from Washington, in Tokyo,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
If you're a bank, what you're doing right now is you're holding cash. That is the game. They are bidding up on the liability side of the balance sheet. They're issuing CDs, time deposits, etc., to take in more money because they're seeing retail outflows, and then they're holding cash. And they're going to continue to do that until they see signs that the economy is turning.
The show stopped yesterday for Mark Cabana of the Bank of America. Brian Moynihan reads his research because it is about this linkage of what fixed income and yield pricing says about the state of commercial banking. Good morning, Bloomberg Surveillance. Jonathan Farrell, Lisa Bramwitz, off today. Thrilled that Scarlett Fu could darken the door and help out so much. Futures advance, even advance in the last 20 minutes, up 21. Make it 22, the VIX 16.45. I'm going to make a quick data check here because this interview is so important right now. We got 4.71% in the 10-year yield. I did a chart in the last 48 hours of the Keefe, Bruyette, and Woods Bank Index. It's what I use. There's other indices as well. It's big banks, it's regionals, and it's the little banks sprinkled in as well. And I rarely use this word, folks, not editorializing, just looking at the technical analysis. It is a grim chart. And I said to our wonderful team, can you get the gentleman from Portland? Joining us now, Gerard Cassidy of Maine, head of U.S. Bank Equity Strategy, large cap bank analyst at Tucker Anthony and R.L. Tay, a name from the past, of course, with RBC Capital Markets. Gerard, you've been doing this for years. I haven't seen a chart like that since ages and ages ago. Why is there no bid to acquire banking shares?
You're right. As you are showing, the chart is quite grim, and there aren't many experts in technical analysis as you've observed, and you've observed it right. It's really just awful.
Okay, we're breaking up there right now. We're going to try to reconnect with Mr. Cassidy. We'll see if we can do it by phone or semaphore. And so I'm going to turn to Scarlet Fu with her knowledge of this. You know, really, do I say never? And yes, I've seen where we go on strike with banks. Boy, are we on strike with banks. As Mark Cabana pointed out yesterday with Bank of America.
Yeah, and Gerard Cassidy was telling us earlier that the scar tissue from March from the regional bank, do we want to say crisis or stresses or tensions?
You can go with any of them.
However you characterize it, you know, it's pretty deep, the scar tissue. And I wonder if it's more paralyzing for the banks themselves and how they operate and the decisions they're making, or for investors. You mentioned the KBW Bank Index. Year to date, it's off 26%, 27%. There are 24 members. You know how many are higher so far this year?
How many?
2.
Yeah.
JP Morgan Chase up 3.6%, and Capital One up 7.9%.
And what's so important there, and Mark Cabana went to this tension here, is that if deposits go out, say, to money market funds, just as one part of a complex soup, you're forced. There's no choice. There's nobody sitting around making options here or hiring McKinsey to consult. You're forced to get smaller. And so many banks on their balance sheet are forced to just bring it in and bring it in. And that's a major reason why people are on strike here.
Remember when Janet Yellen, the Treasury Secretary, said there'll be consolidation in the banking industry?
Where is it?
Where is it? Well, no one wants to mark down anything at the moment. And when talking to different people, they said something has to happen for there to be forced consolidation.
Yeah, I'm very biased on this, and that I think a lot of bankers just like to go to lunch and they like their jobs and they don't want to merge.
Who doesn't like to go to lunch?
Yeah, you know, it's synergies and all that. But you got to believe at some point here, we see basically, you know, I'm not saying a complete roll-up a la Canada where you've got 5 banks or so, but you get some form of mergers and acquisitions. And with the decades of work of Mr. Cassidy at RBC Capital Markets, it's a good place to pick up again with him. Gerard, when do we see mergers? You got to be kidding me. I mean, I get it. There's 4,000 banks. We're not going to 5 banks like Canada, but when do we see a frenzy of consolidation?
Tom, it's a really good question because, as you pointed out, back when you and I were young men in the early 80s, we had over 18,000 banks in this country. We're now down into that $4,000 to $5,000 range. But to your point, it will come back. It's not linear. It always comes in waves. But the biggest obstacle to M&A today is when the buyer goes in and marks the target's book to market. There's a big gap. So think about it for a moment. When you mark the assets to market, the value of those assets are much lower than historical costs today, which means there's a gap in the capital, and therefore the buyers cannot pay big premiums, and there's no deals happening. Plus, you have the regulatory issues, too.
Gerard Cassidy, Jeffrey Rosenberg of BlackRock was heated yesterday that even a sort of kind of like bond recovery of price up, yield down, isn't going to help the banks. They need basically a miracle. Do you ascribe to that, the idea that just a good bond market's not going to get it done because the losses are so great?
I would say it would help in a big way, Tom. I'm with him in the sense that when QT ends, I expect the 10-year bond yield to start falling maybe even more rapidly. And the reason that's going to be positive is because, as you know, the banks have very large unrealized losses in those bond portfolios. Bank of America, of course, is the one that everybody points to. And so a lower 10-year would be very positive for the banks. It would start to your chart again. It would start putting in a bottom on the chart, in our opinion. And if we don't go into a hard landing and credit is not a problem next year, these stocks are poised to have an incredible year, just like 1995, Tom.
Well, we're waiting for the catalyst. Gerard, you talk about the bond portfolio. What about the real estate portfolio? Commercial real estate was supposed to be the other shoe to drop. And for months, we've been waiting for this since March. We know plenty of banks have exposure to that sector. But what's really going on beneath the surface?
It's a really good question because you're right. There is still fear, and there should be. There are some properties in our major urban markets. California Street in San Francisco is one of the more famous ones, you know, dropping in value, I think 70%. So there's wipeout of not only equity, but also the lenders. But two things have happened by that. First, in the very big properties, when you go to the bankruptcy filings, it's not the banks that are lending into that. It's the CMBS market or the shadow banks. They have the exposure. Second, the banks that do have exposure, they're working with their customers. This is not a situation where the property is undervalued, they're up for refinancing, and the bank forecloses. That doesn't happen. They work with their customers, and we heard that very clearly from the banks like PNC, who's one of the best banks in the regional space. They're working with their customers, and they're working to get through this period of challenges in commercial real estate.
So if non-banks have this much exposure, once we do start to see commercial real estate become a bigger factor, what kind of spillover effects would that have to the rest of the banking sector?
There will certainly be some spillover effects, but we have to remember, the owners of the CMBS market, the non-bank lenders, Jamie Dimon in his annual letter pointed out this year that the banking industry has $12 trillion of loans outstanding. The non-bank lenders have $20 trillion. That's where the risk is. The Fed, because of what happened in 08-09, has de-risked the banking industry. And so the spillover will come, but I think it will be very manageable.
Gerard Cassidy, you're outperform on Citigroup. Fortress Fraser, you got to be kidding me. Reverse stock split, I'm looking at $3.96. When does Citigroup get their act together and give us a Gerard Cassidy outperform?
Tom, it's a great question, and it's been a very frustrating stock, of course, and she's doing, I think, a very admirable job in turning around this very large ocean liner. It's unfortunately going to take a while. It's not a 6-month and fix, but we have to think about for a moment, Tom, you and I know this company for years, and when you think about all the CEOs that they've had, she's the first one to actually make real progress in selling businesses that are not meeting their profitability hurdles. Just think about Mexico. That was kind of off limits, and she's the one now has put that up for sale. They didn't sell it. They're going to take it in an IPO or spin off in 2025. But that to me is real progress. But Tom, you're right. It's a value trap so far. Yeah. But as she makes progress, I think it's going to finally work, but it's going to take time, no doubt about it.
Trooper for getting on the phone. Gerard Cassidy, thank you so much for the banking brief. He's with RBC Capital Markets. Scarlett, I'm sorry, this is a huge, huge story to me. I go back to Bernanke 101. The strength of the banking system is everything. That's the Bernanke research over the years at Princeton. And right now, the banking industry, the strength isn't there.
It's as strong as its weakest link. And if you look at the biggest banks, you mentioned Citigroup, it's trading at 0.4 when it comes to the price to book ratio. JP Morgan Chase, which is the best performing bank stock so far this year, its price to book ratio is about 1.39. It's a huge gap.
Okay, this is so much fun. I mean, it's always fun with Bramo, as fun as you can with a toxic brew. Pharaoh and I don't speak together when we're not on the show, so it's sort of fun that John's not here, but having the Foo here is great. And it brings back memories. Me and the Foo. I mean, you got to be kidding me. Look at that photo. She hasn't changed a bit. Me, on the other hand, it's the first place New York Rangers. It's extraordinary.
It's 9
on
games
radio.
in, and we love
Vivi
it.
Chara and Scarlett.
I think I'm wearing
it's a photo of us in the jerseys on radio. Good morning.
Our studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well. as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television. Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Meeting by meeting, we're asking ourselves whether we've achieved a stance of policy that is sufficiently restrictive.
Clearly what the market saw was a preference for the worry of tightening financial conditions. We're at sufficiently restrictive. We can be done.
If I were recommending or talking to Jay Powell, I would recommend that he leave the door open.
Our concern is sort of around May and June, where is the Fed going to be?
It's unlikely that 1/4 point move is going to be sufficient to do the job. So I think it's either zero or multiple rate hikes.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Day after the Fed, day before jobs report, Apple sandwiched in there somehow. Thank you for joining us on radio and television. Jonathan Farrow, Lisa Abramowitz, we're not on speaking terms. They're off today. Always on speaking terms with Scarlet Fu. Double barrel Fu today on Bloomberg Television and Radio. The close this afternoon. And, you know, I mean, we got a lot to talk about here, including that great opening montage, particularly from Vice Chairman Clarida there talking, and Bill Dudley with his fiery op-ed. We'll get to that in a moment. Apple this afternoon. How are you and Catherine Greifeld preparing for that?
We're all over it. How many iPhones did Apple sell in North America? It's going to be decent. How many iPhones did Apple sell in China? That's where the concern lies, because everyone's picking up the Huawei
It's a concern.
Mate 60.
25% per year for the last 10 years is the total return on Apple. There's not a lot of dividend in there. That's just stock lift.
It's not really growth stock. It's not really a safety stock. It's just kind of the all-purpose stock.
We're going to circle back to that here in a moment. The Fed was so important yesterday, and the market move that we've seen there is so important. Let me fold the data check into our Fed discussion. The equity advance that we saw, the energy before 200, the energy through the press conference, up on stocks, up 22 points on Standard & Poor's 500, 42.78, up 0.5%. NASDAQ 100 on fire. The long duration Magnificent 7. I have no idea what that means. Up 0.8%. We mentioned the VIX in the last hour, storied at 16.43. The Fu with a statistic. What was the statistic? Last 10 years, 21 is the average VIX.
Yeah.
Something like that.
21.5 or so. And today it's below 16.5.
I guess it's a bull market. That's what Ed Yardeni says. Thank you to Dr. Yardeni for joining yesterday. Yields come in again, 4.70 on the 10-year yield. Even the 2-year yield under that 5% level. Short rates coming in. David Rosenberg saying it sounds like they're done, 4.94% as well. And Scarlett, I don't know if you had a chance to read it, but Bill Dudley in the opening there, his essay yesterday was incendiary about this isn't Paul Volcker, this is Jerome Powell, and he's got to wake up and worry about being an Arthur Burns where inflation gets out of control. Right. Dudley adamant that they need to be careful about the soft landing all as well.
Right,
angle.
that a pause might open the door or pave the way for some more challenges ahead, especially if inflation accelerates because of the stronger economy that we're seeing that refuses to slow down.
Let me look here. I can do this on the Bloomberg Professional Service, folks. CL1 commodity. I'm going to go GIP2. Two-day intraday on West Texas Intermediate. We did not get down to $79 a barrel on American oil. But I would say, Scarlett, really the surprise of October, given the horror that we've seen in the Eastern Mediterranean, is oil really hasn't played. There seems to be almost an interior optimism that we'll move on from this conflict.
Yeah, but have you filled up your gas tank lately? I know that you drive, what, a Hummer?
No, John Tucker has a Hummer. I've got a Bentley, but frankly, recently it's been in the garage a lot.
Ah, all right. Well, when I fill up the car, it's $60, $70 each time. No matter what, if it's $3.50 a gallon or $3.90 a gallon, it's painful.
Yeah, the oil change in the Bentley is becoming painful, to say the least. We have to talk here before we get to Dan Morris about a story tangential, but there it is, and it has not given it back. And this is the challenges of Japan. Scarlet Fu, dollar yen, 150.35. Week yen, euro yen is what I'm really watching, rounded up 160, and we're almost to the point where we go, quote, into the weekend in Tokyo, where their institutions in the quiet of the weekend have some optionality about what to do about the failure of their monetary policy.
It's so interesting that every time there's a BOJ meeting, there's a report the day before that hints at what's going to happen. Is this the new communication method of the Bank of Japan?
It's been there forever. I've actually personally witnessed it in Tokyo, and it's absolutely bizarre. It usually happens, our time, Sunday night, 7 p.m. our time. You're trying to come out of, you're getting ready for Rangers hockey Sunday night. And the Bank of Japan's with a seismic change. And maybe we'll see that this weekend. Get your radar up on that. We're going to get a briefing now with all that's going on, and particularly what we witnessed yesterday from the Fed, with Daniel Morris, Chief Market Strategist, BNP Paribas of Paris, BNP Paribas Asset Management. Dan Morris, I was thunderstruck yesterday by the market move, the energy of it. Was it just a short cover where so many people gloomy had to cover the gloom bets?
I don't know if I would characterize the sentiment now necessarily as so gloomy. I think we're still trying to reassess and absorb the shock of what's happened in interest rates over the last 3 months. But to the degree that you think that that's happened, and I think for a lot of people, the soft landing narrative is still in place. I mean, I think actually at this point, you can maybe find a bit more of the optimism you had before rates went up, looking out 6 months ahead, 12 months ahead, and think that the picture actually is more sunny than gloomy.
If I need yield, if I do not want to participate in the stock market, where's the most optimal place right now?
Well, two of the parts that we're overweight in our multi-asset portfolios, number one, is Eurozone investment grade credit. So in terms of absolute yield, clearly you're not going to get as much as you are in the U.S. But it's not just a question of yield, it's always risk versus reward. And we think that trade-off is best in Eurozone and investment grade credit. But another area that we've added allocations to is actually emerging market local currency debt. So if you are of the view that U.S. yields move down, which we are, that also should be reflected in local currency EM debt, but you're starting at a higher point, so you get a bit more coupon. And we're comfortable with the currency exposure as well, as we think the dollar is topped out.
Dan, how much of your portfolio should be geared towards the resilient U.S. consumer? I'm looking at Starbucks. It says sales topping estimates on more and bigger coffee orders. Peloton giving a weak sales outlook, but does see growth later in the year. And of course, Apple will be reporting later on this afternoon. And by all indications, people lined up to buy $1,200 plus iPhones. What is the long bet here on the U.S. consumer?
I think the challenge is we've kind of maybe been swept up in this optimism, the surprising growth. We know this being driven by the excess savings, but no matter what, that's got to slow over the course of the next year, and in a very positive way, meaning we just can't sustain growth at this level. You're never going to get inflation back down to target.
So it's quite tricky now, I think, to assess how that process is going to go. So yes, clearly the U.S. consumer has been great. At the same time, given where mortgage rates are in the U.S., where the interest rate that you're paying on a credit card clearly is quite high, I think it's more a question of how quickly that demand wanes as opposed to really betting on any kind of growth at the same level that we've had over the last couple of quarters.
Okay, so the easy money might have been made there when it comes to the consumer. Where does that leave you for the rest of the year? And I know this is fairly short term, but we're entering a seasonally strong period, even as October has proven to be a bit ugly.
Well, and one thing that we're looking at is if you believe that you've had the valuation adjustment in the market, particularly in growth stocks already, due to the increase in interest rates, if you also think the market has now priced in the impact on growth and on earnings from higher interest rates, then you step back and say, okay, from here, what's the trajectory I expect to see for earnings, in the next 6 to 12 months? And I think you come back to when the U.S. still looks relatively better, certainly compared to Europe. And within the U.S., I mean, I think you do come back to the growth part of the market. Now, I think that should be diversified exposure to growth. We're not looking at just 1, 2, or 7 stocks. But I think that trajectory is still good. I think it's less susceptible to interest rates.
Tell me about tech from Paris, the BNP Paribas view on American tech. I'm fascinated, Dan, of the distance away from these juggernauts in America. How do you treat them out 3 years?
I think it depends on your starting point in terms of valuation, perhaps less than earnings. When we know earnings expectations have moved up a lot over the last couple of months because of AI, to what degree that's justified or not, we'll see. It can be adjusted down and you're still going to have a pretty positive earnings trajectory. I think what's crucial now compared to where we were a year ago is that the forward PE on the NASDAQ's in the low 20s. Whereas the peak over the last year or so was 33 times. So even with a great earnings trajectory, if you're paying 33 times those earnings, that's not going to work out so well, and it certainly didn't last year. I think we're starting from a point of, let's say, neutral or average valuations, which I think is a great starting point, and I think what is still a pretty positive earnings trajectory, regardless where you're standing.
Interesting to see. Dan Morris, thank you so much this morning. Really greatly appreciated. He is with BNP Paribas there on the chart there. I don't know how guys like Dan Morris write a year-end outlook.
Yeah, I know. You have to keep updating it.
How do you do it?
Constantly.
It's November 2nd. Is that November 2nd? Yeah.
It is November 2nd.
November 2nd. By the 15th, you got to have 14 pages penciled out. It goes in a 60-page, phone book that, supposedly
on the 15th, you don't know if the government's going to shut down.
Well, there's that on the 17th, I believe it is. Yeah, well said. I mean, Greg Valliere touched upon that. But I don't think I've ever seen a year where I just can't make it up between the geopolitics and what we're seeing.
Well, you can look at the relative appeal, and it does still look like the U.S. economy holding up better than other economies around the world.
Way better. We saw in the Zeitgeist yesterday, folks, I don't have the numbers in front of me, I'm so sorry, but real GDP aggregate lift from the pandemic, I remember this number. The United States is up 8% in inflation-adjusted growth from 2019-ish.
That's bananas.
Everybody else, bananas. Well, they cost more, but particularly organic, and they're never green enough.
They're never green enough?
They're never green. I'm buying rotten bananas at the store. I don't like that. But the bottom line is everybody else is up 1 or 2 or 3%, and with our stimulus, we chose to be up 8%. As well. We see that, I'm sorry, Scarlet Food driving the markets higher this morning. We're up 18, we're now up 22, 0.5%. NASDAQ 100, I'm not up a stick yet, but I'm up 118 NASDAQ 100 points, 0.8%. VIX, can we get a 15 VIX today? Maybe we'll have to see on that. Yields in 3 further basis points. My eyes, when I look at the Bloomberg screen on yields, I'm really not there, 4.71%. On the 10-year yield, 2-year way below 5%, 4.94%. The currency space, dollar actually resilient. I thought the dollar would pull back a little more on DXY with a 107 print yesterday, 106 on that blended major currency index. Euro, we've got to look at Euro 106, a little bit stronger Euro, 106.37. And into Lizzie Burton here in 15 minutes on the Bank of England, 191.93. The Standard & Poor's 500, it is up 0.5% this morning. And we say good morning, Scarlett Fu in for Jonathan Farrell. and Lisa Abramowitz. And you mentioned, there's a headline. Thank you, Amy. I needed to see that. Shake Shack jumps 9% after third quarter revenue, keeping up with the Starbucks. I mean, it's junk food Thursday.
Ozempic not hurting Shake Shack, and it's going to be interesting to hear what the company says about the concerns surrounding Ozempic. But yeah, Shake Shack moving up in pre-market trading after a third quarter revenue beat. Revenue for the period, $276.2 million. Analysts were looking for 275 comp sales, which is, of course, the metric everyone uses here, up 2.3%. Actually, that was shy of what analysts had expected, which was 4.1%.
You look at Shake Shack and you go lunch, dinner, or how about the 9 p.m. seamless DoorDash rush?
Is that what you do?
No, it's not what I do.
Well, you don't do 9
what
p.m.
others do. We do the Shake Shack order that arrives at 9:52.
I like the Shake Shack wine
as well. Starbucks, I'm so glad you mentioned that. I missed that today. And of course, we're checking it out. The pumpkin cream cold brew, $5.93. I mean, what's the EBITDA of a pumpkin cream cold brew? I mean, I go in, I say I'll have a pumpkin cream cold brew, and come on, the margin on that puppy's like 92 cents, right?
Yeah, and of course with China recovering as well, this is a good story for Starbucks, and people are addicted to their caffeine. It continues. Yeah, I know. Cold brew, caffeine, pumpkin.
We would never do this. I'm going to cut to the chase. With Brammo, I got to do Birkenstocks and hummus. With Fu, I'm talking Shake Shack and Starbucks. This is a good and beautiful thing.
And we could talk the Rangers on top of that.
It's junk food surveillance. Stay with us. We did Yum Brands a couple days ago. We'll keep it going here. Futures up 23. The stock market advances. Good morning.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. Last month's jobs report caught everyone off guard.
Major upside surprise on the headline number.
Considerably stronger than people thought.
Almost twice as much as what the expectation was.
This Friday, Tom, Jonathan, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
Rates are going to have to stay higher for longer, potentially even go higher.
Can there be lasting damage here?
Those cracks are starting to form.
The October jobs report, Friday on Bloomberg Television and Radio.
What Speaker Johnson needs to do, and this is what he said in our lunch, is, he needs to notch a win and the trust of his membership over there, and by putting forward an Israel-only package with an offset, arguably it's it's an offset that's been debated, that he's demonstrating that he's interested in spending less money, but also supporting Israel. When it comes to the Senate, many of us are committed to having Ukrainian continue this, to push back Putin and keep him, get him weaker and weaker, and these are all intertwined.
From West Virginia, political royalty, Shelley Moore Capito. She is a senator with Joe Manchin, and of course a different outlook, always from West Virginia, an important outlook on the backbone of the Appalachians and of course America as well. Talking there on the moment in Washington as they consider funding for Israel and for Ukraine. Let me do a market check here before we get to some important voices. We continue to lift. It's been a nonstop lift from about 2:02 p.m. yesterday, Wall Street time, up 23, Dow up 124. VIX comes in storming, 16.44. Can you imagine a 15 VIX off of the gloom of 5 or 6 days ago? 2-cent spread, it inverts a little bit, 24. Negative 24 basis points for the pros keeping score. And the inflation-adjusted yield, which is important to everyone, is cratered. That's the proper word, from 2.50% to 2.30%. That's a ginormous drop in the inflation-adjusted yield, maybe not what Chairman Powell really wanted to see. I'm going to leave it at that. Right now, this conversation's so important. Jonathan Farrell, Lisa Bramwitz off, Scarlett Fu really helping out today. Double duty for Bloomberg Television and Radio. Scarlett Fu this afternoon on Apple earnings. We now turn to the politics of what we are witnessing, the horror that we're witnessing in Gaza, whatever your political beliefs and outcome. Oliver Crook on watch in Tel Aviv, and Anne-Marie Horton in Washington this morning. Anne-Marie, I would suggest that most politics across the aisle, politicians just want to get to Monday. They got to try to get to the weekend, given the news flow that's coming out of Tel Aviv and out of Israel. How will they accomplish that? What do they do on a Thursday? What do they do on a Friday just to get to some form of constructive resolution?
Well, it's not just complicated by the news flow, Tom, but it's complicated by new personnel. We have a new Speaker of the House. He is bringing to the floor this Israel standalone bill before the weekend. And the issue with this bill at the moment, and we heard from Shelley Moore Capito, the West Virginia senator there, she had a lunch with him along with the other Republican senators and wanted to hear what he had to say. And she thinks he has a good path forward. He is trying to get some of that goodwill in the Republican conference by saying that there needs to be a pay-for this to offset the deficit when he's going to be spending. What he wants is $14 billion to Israel. But the issue is the Congressional Budget Office scored it and said that actually this will add more than $12 billion to the deficit, because when you rescind money from the IRS that's supposed to go after tax cheats, it's actually going to add money to the IRS. So this is the complication when it comes to Congress, on the House side, to try to pass an Israel standalone bill. And then on the Senate side, Democrats and many Republicans, especially Senate Minority Leader Mitch McConnell, want to see more than just a package for Israel. They want to see the complete package for national security partners around the world. Israel, Ukraine, Taiwan, as well as money for the southern border.
Oliver, how is this being treated in the halls of the government, a beleaguered and I guess a bipartisan unified government in Israel? How do they observe the swirl that Anne-Marie Horton's living?
I think until there is a real complication and this bill is an actual jeopardy, I think that they will be reassured by the fact that at least the United States apparently seems to be standing fully behind the government. And again, despite the comments as they evolve very slightly every now and then from the U.S., the administration has been very clear in its support for Israel, and Israel has been very sort of grateful for it, and it knows how important it is. And that is really what they're expecting to hear from Antony Blinken as he arrives here tomorrow, again, coming both to Israel and to Jordan. However, again, the backdrop in how it's being received, maybe not in the United States, but more in the global audience, we have the Jordanians pulling their ambassador to Israel yesterday. This is a meaningful step with Jordan as one of the first nations to make peace with Israel. So they're very also conscious of the global audience, despite the fact that Benjamin Netanyahu says either alone or with others with us, we're going to continue to push this fight until victory.
So, Oliver, I want to focus on semantics for a minute here, because President Biden used the word pause when it comes to civilians leaving Gaza. Was he suggesting a ceasefire? Who is he speaking to when he uses the word pause?
So I think that it's actually not just a sort of euphemism for the same thing. I think there is a meaningful distinction between a humanitarian pause and a ceasefire. How I understand it, the humanitarian pause could look something like what we had in the first week of fighting, where the Israelis said, we will not bomb certain regions for a few hours, or you are clear to move, and maybe that is where columns of aid and people can move. A ceasefire is something that, though, even if it were temporary, involves political negotiation at the upper level, a diplomatic relationship between the two parties, which are here Hamas and the Israelis, and that is just patently off the table for the Israelis. The U.S. supports that view as well. So I think that if there is anything, it will be one of these humanitarian pauses. Again, but in order, because the Israelis will not dial back the military, can they dial forward the aid?
Yeah, so Anne-Marie, over to you. Same idea of this semantics, pause versus ceasefire. Talk a little bit about the cross currents that President Biden faces, the pressures that he faces in trying to speak of the horror that's taking place in the Middle East while satisfying the different constituents that he has to address.
Well, he's in a rock and a hard place. He was out on the road yesterday. He was in Minnesota, and he was greeted with protesters who are calling for a ceasefire. And at a fundraiser last night, someone said, I need you to call for a ceasefire now. And he says, I'm not going to do that, but I think we should have a pause to get the prisoners out. Remember, there are still Americans being held hostage by Hamas. So he's calling for this pause, but the president is under an immense amount of pressure because what he is hearing from Arab Americans, what he's hearing from Muslim Americans is that they want to see this Israeli bombardment on Gaza civilians to stop. While, yes, Israel is going after Hamas, there are obviously civilians that are getting caught in harm's way. We saw that over the past 2 days. Yes, Hamas does use schools, they use refugee camps, they use hospitals as their bases, and this is why the United States has said how Israel does this is so important. But the president, at the end of his comments, came back to the fact that he said, I want Israel to do this by following the humanitarian international rules of war, but he said, Hamas is a terrorist organization, flat out. That's what they are. And that's where the president is right now. And he's getting a lot of flack from Muslim Americans. And this potentially could have an impact on some of these swing states like Michigan when you look into November of next year.
Emery, I've got to go to you on this. You had the senator from West Virginia on. She's old-line political royalty. She replaced Jay Rockefeller in the Senate. You're really good at this, Emery, in that it's not about the people in the Beltway, but it's out there. How is this all playing in the senator's West Virginia? Are people riveted by this, or is this an inside the Beltway elite story?
Israel is certainly not inside the Beltway elite story. You are seeing this conflict be debated all over the United States. We are seeing this happen every day at university campuses, every day in the news, on social media, some of which there is a ton of disinformation happening on social media. So this isn't impacting constituents of individual districts. What's really important right now from politicians, we also spoke with Mark Wayne Mullen the other day of Oklahoma, is how do you explain this to your constituents and why it's important? He's an individual that wants to see more aid to Ukraine. But a lot of Republicans say the Biden administration has not explained well why we should still be in Ukraine sending this aid. And he said it's because of the Budapest Memorandum. So it's how you explain it to American people, Tom.
Anne-Marie Horton, thank you so much. Oliver Crook, thank you as well. We'll have much more report on this. Balance of power, look for that tonight. Futures up 23, Dow Futures up 123. The VIX, really extraordinary, 16.46. I'm going to say that started with the Fed meeting yesterday. Scarlet Fu and Tom Keene, Bloomberg Surveillance.
sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on that folks are so excited about it. Climate tech is the hottest area to be in.
Bloomberg Surveillance, good morning. Jonathan Farrow, Lisa Bramwitz, and Tom King. Brammo off, just way too much optimism yesterday. She had to be medicated. She's home. John Farrow off. He was on a cruise, and his Scarlett flew with us today. John's cabin was so big, 16 floors up on one of those, cruise ships, that he could see out the starboard side and the port side. He got so seasick he hasn't been able to come in.
On vacation.
Yeah, he's a rock star, and he got so seasick he's had to recover.
Yeah,
that's what he's doing.
It's a long recovery too,
So flew with us, which is a good and beautiful thing. I mean, we've got the Fed meeting coming off of, and we've got Apple today. Jobs Day tomorrow. We got some wonderful conversation coming up on Bank of England in 29 minutes. Futures up 23, Dow futures up 121. Yields still come in. It's still a Jay Powell, we're done celebration. No other way to put it. 10-year yield 4.71%. Even dollar participates. A little dollar weakness, but I'm going to call it dollar resiliency. Euro 106.34. John Riding says if I don't quote sterling, he'll walk out in a huff. 122. On sterling. When John Riding started economics, it was 4-1. Something like that. It's Churchillian. Under surveillance today, and of course, on a very serious note, the President of the United States, as Anne-Marie Horton said, out in Minnesota, asking for a pause to the fighting in Gaza for hostages to be released, but stopping short of asking for a full ceasefire. Today, as many as 400 Americans could leave Gaza after the Rafah crossing on the Egyptian border opened for the first time since the October 7th attacks. Apple, we're going to just touch on this right now. Apple set to report earnings after the closing bell today. Investors will be looking for Scarlett Fu's brand new iPhone 15 sales, keeping revenues and cash flows going. And of course, there's a huge mystery to China. You're going to do this with Catherine Greifeld. You've already read in on this. What's a single thing you're looking for on Apple?
Well, obviously iPhone sales and iPhone numbers in the U.S. versus China. So the contrast between these two markets, the most important markets for Apple.
I'm going to look at the financials, and I went in and looked at the Bloomberg Professional Service. You can do this under the FA screen. How about this? Back to 2019, Apple sales, their revenues are up 47%. And there's a lot of other companies that have done really well at this, but their free cash flow is up 71%.
They have a lot of firing
power. The business
power.
Leverage. This isn't in the CFA agenda, the curricula rather. I mean, this is absolutely extraordinary.
Actually, Catherine Greifeld, who we gave a shout out to, wrote a great story about how some of these big tech companies with their massive free cash flow and their massive cash holdings are benefiting from higher rates because their interest income is rising in this kind of environment.
A lot of mail. I'm so sorry, folks. Farrow's not here to drive forward Premier League and the rest of English football. Let's do the baseball story first, and we'll get to the real story with John Riding. Texas Rangers, they spent a lot of money. They're World Series champions after defeating the Arizona Diamondbacks. Game 5 last night. That's 4-1. And that's sort of a a quick World Series. The Rangers held on to a one-run lead before driving in 4 more in the 9th inning. That's the end of the game to help clinch the series. It's the team's first ever World Series title.
Baseball has had a renaissance this season.